Security is something we all wish we didn't need to think about. Altron knows exactly how important it is to protect the assets you have worked so hard to create and accumulate. This is exponentially more important in our digital world, where new threats are coded every second and vulnerabilities exploited as we speak. And yet, economies continue to grow and transform and shift. And precaution shouldn't be the enemy of your profits. We believe in providing safety that won't slow you down. We believe that you should be able to take the important business risks without putting yourself at risk. We believe in protection that supports your purpose. And we know that, to accomplish these, we need to fuse together the best offerings from diverse disciplines into a singular solution that secures your identity, defends your data, safeguards your cloud workloads, and continually manages your operations in a way only Altron can. Let us take you on a journey to secure your business. Identity management. As we widen our world of work, we open thousands of new doors into our organizations. Our secure digital identity profiles are the crucial keys that maintain tight control over access to your inner workings, sensitive data, and confidential information, so that spreading your workforce and their devices out doesn't allow unwanted elements in. Data privacy and protection. Trust is earned over years, but destroyed in seconds. The responsibility we have to safeguard our customers' data is as important for their futures as it is for the organizations they rely on. We find encrypt your data and align your privacy compliance with the regulatory requirements of your jurisdiction as well as with your business strategy, so you can innovate for your customers without having to worry about exposing them. Cloud security. With more than 80% of workloads taking place on cloud servers all over the world, cloud is as important to businesses' performance as their people are. We support you with advice on how to harness cloud security capabilities, and our solutions protect your users at the new cloud edge and the workloads that happen 1 billion times a minute within them. Managed security services. Like our organization, our services, and the threats to them, security must be ever evolving. But evolution requires a framework, purpose-built for the future, designed with intelligence and forethought. Our managed security services pulls on global insights to proactively keep you ahead of the threat curve, monitor and prevent any attacks, and defend your entire value chain 24/7, 365. Your business and its future is your focus. The safety and security of your digital assets is ours. When your intellectual property is safe, your customer data is secure, and all the thousands of doors and windows into your organization are closely monitored, you will truly have the freedom to continually grow your value chain, disrupt your industry, and build your story far into the future, whatever that may look like. Altron. There when it matters.
Altron Capital Markets Day 2021. Please welcome your host, Nzinga Punta.
Molweni, Dumelang, Ndimacheloni, Avusheni, Sanbonani, Huyamora, a very good morning and welcome to Altron Capital Markets Day 2021. My name is Nzinga Punta and I'm so pleased to be your program director today, guiding you through what promises to be an exciting and full day. Thanks so much for making the time to join us. Today is about sharing Altron's 2.0 strategy, which includes the growth plans for the year ahead. Altron's Group Chief Executive, Mteto Nyati, is in studio with me. A very good morning and welcome, Mteto.
Good morning to you, Nzinga.
I'll hand over to Mteto in a minute, but here's what the rest of the day looks like. We'll be hearing from the Group Chief Financial Officer, Cedric Miller, and then each of the business operation leaders will be sharing their plans with you. So we will be hearing news from Altron Security, Altron Health Tech, Altron Systems Integration, Altron Carabina, Altron FinTech, and Netstar. But this communication session is not a one-way one. We'd love to hear your questions or comments, and all of the leaders will be here in studio to answer your questions after they've presented. All you have to do is type your questions or comments in the chat box, and we'll get to them a little bit later. But enough from me now. It's time for the Altron 2.0 strategy.
Thank you so much, Nzinga, for that welcome. Good morning, everybody. I would like to also welcome you to this Capital Markets Day for Altron. We will be sharing, as Nzinga has indicated, Altron 2.0 strategy. We refer to this strategy as a strategy which is about continuity and change. Continuity because when you look at the many things that we have done under one Altron strategy, we want to take those things forward. But at the same time, our environment has changed. So we have changed slightly our strategy, hence the continuity and change. So I will walk you through a couple of items. The first one, as you may have heard, I've referred to one Altron. I think it is very proper for all of us to formally close the one Altron. We had 4 years ago a clear plan that we shared with you. How did we do against that plan? Briefly, we want to share all of that with you. And I will take a few minutes to just look at the operating environment that we have. Then I will dive into the one Altron, the Altron 2.0 strategy, then conclude with our priorities for the year. Looking at the one Altron strategy that we shared with you in FY17, really it had 3 key components. The first one, and the urgency at the time, was for us to dispose of the non-core assets. I personally inherited 7 assets that we had to dispose of. And the team did a great job in making sure that under very difficult conditions and circumstances, we were able to close successfully those disposals. We then set about to create a respectable IT company. And it was not just an IT company. We were very clear about the things that we wanted to do. We said that we want to double EBITDA in 5 years. The base EBITDA at the time was 740 million. We said we wanted to double in 5 years. We also went ahead and said that there are certain characteristics that this company must have. And one of them was to make sure that we deliver leading returns to you, the investors. That was key to us. And to do that, though, we knew that we needed to do certain things within our company. And one of those was to make sure that the company talks to the customers. We deliver exceptional service to our customers. We also create a great environment for our employees to work. And last but not least, we do good business whilst doing good. So that is the company we set out to create. We also knew that when we were talking to our customers, we did not have all of the offerings that they wanted. We wanted to make sure that we had end-to-end offerings. And we set out to target some acquisitions, and we ended up putting together and going after some targets, and we closed 4 key acquisitions during the period. 2 of them helped us to move offshore in the UK and in Australia. The other one helped us to be relevant to Microsoft here in South Africa. And then the last one helped us, Ubusha, helped us to be relevant in the security space. So how did we do? So how did we do? From the JSE perspective, you are quite familiar. I'm not going to be walking you through the performance. Even from the first year, we were leading when it comes to tech space in terms of the performance of our share. In the second year, we were number 2 in the tech space, and so on and so on. In this year, we finished again in the software and services, we were leading in that space. So as much as management is not something that is preoccupied by shares, but for us, we know that there are certain activities that we need to do internally such that there can be a probability of improved performance in the Johannesburg Stock Exchange. So that is what we do as management, focusing on those things that we've got control over. When it comes to the company, the respectable company that I wanted to create, we looked at the revenue. We made sure that we deliver revenue growth. And EBITDA, we were very much in line with the expectations that we have set. In fact, we were ahead of those expectations. Employee engagement, we have consistently been growing and improving our employee engagement. I must say, this is an area where, in my mind, it's a never ending. You have to continuously be improving because things change, employees, their needs change, so we continue to focus on this. And this is so important for South Africa. In an environment where there's shortage of skills, we want to differentiate ourselves by making sure that we have a great environment for our employees to work. When it comes to our debt levels, we inherited a huge debt in this company, but we worked as a team using some of the proceeds to drive down the level of debt. We entered COVID-19 with a healthy debt position as a company. And one thing that I'm very proud of a lot is the fact that our net promoter score continues to go up. And to me, this is an important indicator because it's a leading indicator for performance. If our customers are happy, so we will start to see great results in the periods that follow. Looking now at our operating environment, how is it like? We all know, you are here globally, we understand that we are challenged by the COVID-19 pandemic. Even worse here in South Africa. In South Africa, we've got also some economic challenges. So it's a combination of those two things that we are facing. And look at the economic climate as estimated and the outlook that's been given by the IDC. It estimates that our GDP growth in this year, 2021 in South Africa, is going to be 3.3%. But the same IDC, when you look at the IT market is estimated to be growing at 4.2%, slightly higher than GDP. That is the space where we are in as Altron. And we are going to hopefully be enjoying the benefit of operating in an environment that is growing slightly faster than GDP. But our choices as a company, our choices that we have made when it comes to Altron 2.0, we want to make sure that we are even in spaces that are growing much faster than the 4.4%. And that's what I will be sharing with you as we go along. Again, here, when you look at the operating environment, our customers are at different stages in their own evolution when it comes to their response to COVID-19. Many of the customers were caught off guard. They were not ready to operate in this new digital world that this COVID-19 is demanding of all of us. Those customers, we had to work with them to prepare them for those environments. The other customers, right now, they are in what I call the recovery stage. And they demand different things for an IT partner like us. And a few customers, I would say they are in that future enterprise state where they have fully embraced digital, and their demands are completely different from the other two categories. We, as a company, have decided to position ourselves regardless of where our customers are in their journey. We want to be relevant to them, work with them, partner with them, help them to make some of these choices. Because some of these choices are difficult, and you make one choice, you are stuck with that choice for a long period of time. So we want to help them to make the right choices. So we and my colleagues will be sharing with you, they will be helping you to understand how we are partnering with customers for their digital transformation journeys. As a company, we had to go through those journeys ourselves as Altron, make sure that we are drinking our own champagne, but at the same time, we use the opportunity, the environment that we are finding ourselves in to ask, are we at the right size of the business? And when we asked those tough questions, we came to the conclusion that no, a number of our operations needed us to trim down, to be much more leaner. These were very tough decisions that we had to make. In fact, it affected over 650 of our colleagues. Difficult decisions that we had to make as a team. But we had to make those decisions because at the end of the day, it's also about the survival of the company. It's also about making sure that we emerge out of this environment. We may be leaner as we emerge, but we wanted to emerge stronger and much more relevant to our customers. So we took those decisions. And these structural changes that we have made will see us getting some benefits going forward. And overall, we estimate some of those benefits will be about 150 million per annum. And we've recently concluded a restructuring of our head office. In fact, in this month of February, that's when we're concluding it. And we estimate that the savings that we're going to be making out of the restructuring of the head office is about 80. So the 80 head office, about another 100 million from the rest of our operations. That is the savings that we are taking into Altron 2.0, which is positioning us well for the future. We also had to make sure that as a company, we have created a digital workplace. We have standardized our platforms in Altron. We're using Office 365. We're also using D365 for our ERP. And this has helped us a lot to make sure that we're able to share information across the various operations, and we're able to communicate in these very difficult times using platforms like Microsoft Teams, making sure that we take some of our information, put it in the cloud as in OneDrive. So these are some of the tools that we are using that were not necessarily being used generally across the business. We also have migrated our Netstar business. The data from that is one of those businesses that's generating a lot of data all the time. It used to sit on premise, and we've decided again to partner here with our Microsoft colleagues. Microsoft, using Microsoft Azure, we are probably the largest consumer of Azure in this country through Netstar. We implemented Workday, make sure that our employees are able to engage with the company in a way that they expect of a digital company like ours. So these are some of the structural changes that we have made. And some of them to improve customer experience, some of them to improve employee experience, but overall to significantly reduce our cost base, our overhead as a company. We made some strategic choices This is never easy. You know, you try to be all things to all people, but you end up nowhere. So we forced ourselves to make some of these choices. And I've just shared with you here some of the choices that we have made. I'm not going to be going through each and every one of those choices. But with the first one that maybe you are interested in, because we have just done the demerger of Bytes UK, is the fact that we have made a choice as a leadership team that we want to be an international company. Not global company, but an international, which means you'll find us, maybe we may find us again in the UK and in other geographies where we believe that it makes sense for us to be in those geographies. We continue to believe that as a company like Altron, you have to have a fair percentage of your revenue coming offshore, and that will come from our international operations. We have said this thing many times, that our approach to growth is not acquisitive. We're not going to be going crazy and buying this and that and other company, but we will continue to choose and make acquisitions that help us to acquire skills or capabilities in certain areas. That is what we'll continue to do. But most of our growth is going to be largely organic, driven by the potential that we continue to have. Look at South Africa. We've got 20,000 enterprise customers here. And many of them, we have a huge opportunity to increase our wallet share in each and every one of those customers. We also want to be, when it comes to the capital intensity, low. And to get to that point, we have to make some choices. And maybe the last point I would like to make here, we would like, as a business, to be in the high end of value. We're getting out of commodity businesses. We're getting out of being that company that resells other people's IP. We're focusing in on our own intellectual property through our platforms, and also moving into high-value services through systems integration. And that is our play as we move forward. So we've made those choices. Once we've made those choices, then we have to look at our portfolio and say, how does this portfolio talk to those choices? And I will share with you the result of that exercise. Here, I'm going to be highlighting really two things. The segments that we have come up with, we've come up now with 3 segments: managed services, digital transformation, and own platforms. And each and every one of our operations fit within those 3 segments. The areas of growth, remember, I said that in South Africa, the IT market is growing 4.2%. But the choices that we have made as a business, the areas of growth, cloud, data, security, and automation, those areas are growing double-digit. That's where we're focusing. That's where our skills are. So we will be seeing us growing faster than the market because of the choices that we have made, those growth areas. Maybe the last point on this slide is that our goal is to triple our operating income over the next 5 years. The base of that is 451 million operating income. So that's what we want to triple over the next 5 years. When you're looking at the expectations that we have of the different segments that I've shared with you, the managed services business, that business, our expectations are aligned with CPI there. Where we are going to be getting the most growth is in our digital transformation segments. And then the last segment, where we own our own IP, there we're expecting mid to high single-digit growth going forward. So those are our expectations. So each time we come to the market, we're presenting, we holding ourselves against some of those targets that we have given ourselves. When it comes to the disposal group, of now bringing the disposal, the disposal group came at the back of the exercise that we did once we have made the strategic choices for our business. We came to the conclusion that 3 of those businesses do not quite fit our strategic choices. Those businesses being Document Solutions, Arrow, and People Solutions. If you look collectively at that group, the amount of capital that is tied up in that group, it also talks to, again, what we say, we want to be low capital intensity. If we get out of those businesses, it's going to significantly reduce the amount of capital that's tied up in those businesses. So that is the decision that we have made. Where are we? Where are we when it comes to the disposal process? We have just completed creating information IMs, and we have shared this to a number of people that are interested or who have expressed interest in these companies. Just to share with you, when it comes to Document Solutions, we have got 5 interested parties. Arrow, we have 4 interested parties. In People Solutions, we have got 15 interested parties. So, to conclude, what are our priorities for this current financial year? Yes, we've got a 5-year plan, but for the next financial year, what are the priorities? Our priorities are really categorized into 4 areas. The first one is we make sure that we dispose of our non-core assets. That's Altron Arrow, Document Solutions, and People Solutions. This process, we want to make sure that at least by the end, when we announce our interim results, we should be really be either have closed or we're in the process of closing all of the disposal of these assets. The other priority is the value unlock. We did an exercise last year, exactly at this time, what we called the sum of the parts exercise. That sum of the parts exercise, it led to us going to our board, having a discussion with the board, which led to us doing the demerger of Bytes UK. You all know how that played out. It played out well, and it was a successful demerger. We have, right now, we are working on doing a similar kind of exercise. And this exercise, we will be sharing it, the results of it, we'll be sharing it with our board at the end of this month. And the board will have to make some decision regarding whatever we would have shared with them. And if it leads to us taking actions, we will come and communicate those actions. But right now, we are not in a position to communicate anything. Where we are is we're finalizing the exercise and we'll make our recommendations to the board. Also, looking at our portfolio, it is so important that we understand or make sure that we have entities that do not require us to invest so much capital in them. We have to continue to be critical and ask ourselves, do we truly have each and every one of those operations quite fit our strategic choices? If they don't, then we'll make the same recommendation to our board, which sits at the end of this month. The other priority is bolt-on acquisitions. Great acquisition, Ubusha. It stood out, it continued to grow during COVID-19. It showed how it was key for us to make that acquisition as a company. great acquisition. But what we have realized is that we do not have all of the solutions that our customers are looking for through Ubusha. And we need to make sure that we add the capabilities and the offerings that we are missing in that portfolio. So that is what we will be focusing on, make sure that we can be truly a security partner to our customers, both enterprise customers and mid-market customers. Bolt-on acquisitions for Netstar. Netstar is an operation doing well. It's been transforming over the last 3 years. We want to make sure that we continue to build its offshore contribution, and that is what we'd like to do there. Last but not least, in terms of the focus areas, is for us to maintain our performance, our track record of execution. This is very important. As we move into Altron 2.0, it is so key for us to continue to deliver in line with what the goals that we have set for ourselves. And I've shared with you the segmental goals that we have set for ourselves. We want to make sure that we deliver in line with that. But the other area where I am very disappointed is Altron Carabiner. We have not quite turned around that business. So this is the year. This is the year for us to get the value out of the Carabiner acquisition. So on that note, I'd like to say thank you so much. This captures our priorities for the year. This is what this team is going to be focusing on as we move into this year. We do not want to focus on 1,000 things. We want to focus on a few things and do those things well. And these are the things that this team is focusing on. With that, I'd like to hand you over to Nzinga. Thank you so much.
Thanks so much, Mteto, for your insights, inspiration, and a look at the future of Altron. Please remember that if you have any questions for Mteto, please type them into the chat box. He'll be back to answer them later. It's time now to talk about Altron 2.0 in numbers. We're now joined by Cedric Miller. Very good morning to you, Cedric. It's over to you for your presentation.
Thank you very much for that introduction, Zinga. Yes, I would certainly like to use this opportunity to talk a little about the numbers as they relate to Altron 2.0. So a couple of things that I would like to touch upon would be, some historical information relating specifically to Altron 2.0 in terms of revenue, operating income. I would also like to touch on the CapEx requirements of this Altron 2.0, our working capital has always been a major focus for us. It will continue to be a major focus for us. How do we think about our debt structure? And then I will conclude in terms of framing how we think about our capital allocation and what would be the key focus areas for us in Altron 2.0 over the next 12 to 18 months from a finance perspective. So let's get right into it. So from a revenue perspective, we really like to think about our business in terms of gross invoiced income. Now, just as a quick reminder, the difference that we see between gross invoiced income and statutory revenue relates to the margin that we earn on some of our agency type products. This would typically be, for example, our cloud offerings, where the performance obligation actually rests with a supplier, either a Microsoft or an Amazon. We invoice a customer, by way of example, 125 Rand. The cost of sale is 100 Rand. We can only reflect that 25 Rand as statutory revenue. But yet our working capital is driven by the 125 Rand that we have invoiced. Now, this used to be a major adjustment, so to speak, in our Bytes UK business, but excluding our Bytes UK business, we have the same situation, for example, in our Carabiner business, as well as Altron Security, albeit on a much smaller scale. So on this slide, we have provided some historical revenue numbers as it relates to Altron 2.0, and our objective over the next 5 years is to grow our revenue by just over double digits. So in other words, the lower double digits. Clearly, we have to overcome the economic inertia that's COVID related. So this would be a 5-year term objective for ourselves. Mteto have spoken a bit about, should we make any bolt-on acquisitions, then our revenue expectation would be higher, because the objective, as I've expressed here, typically relates only to organic growth. Moving on to operating income, again, some historical information supplied. And this is just to contextualize the 451 million base that Mteto has articulated. And here we have a very clear objective of tripling this number over the next 5 years. When we look at our CapEx, we split our CapEx and try to provide information in terms of what CapEx would be required for replenishment, what CapEx would be required for expansion, and then we also split out Netstar. And the reason why we split out Netstar is because in terms of Netstar's rental units and recent events, for example, such as the Toyota transaction, Netstar's CapEx requirements are different and behave differently from the rest of the ICT assets that we do have. From an ICT perspective, we have reached a state of maturity, and what do I mean by that? What I mean is that there's no significant CapEx investment required in order for these businesses to deliver. But when we refer to replenishment, for growth, CapEx for expansion, here we refer to typically things like R&D, or where we buy technology equipment with new features that allow us to actually have more advanced transactions over our platforms, that we actually label as CapEx for expansion. But in terms of a state of maturity, looking only at the ICT assets, here we can see that the CapEx requirements as it relates to depreciation and amortization, the CapEx requirements are typically slightly lower than the depreciation and amortization, which then points to no material CapEx requirements in the recent years and also going forward. There is one exception though, and that would be in this financial year, as we are starting to complete the move to our campus, as well as the new warehouse that we have built. Both of those projects are nearing completion, and as a result, we will have a slight anomaly in the FY21 year where the CapEx spend will be higher than the depreciation and amortization. Also, another issue that I just want to point out here is that the depreciation and amortization numbers reflected here does not include right of use depreciation required for, in terms of IFRS 16. Working capital is a very important focus area for Altron. It has been and it will continue to be a major focus area for us. When we announced our FY 2020 results, we did indicate that our working capital for, let's call it the South African assets, certainly has peaked. And from FY 2020, in the first half of the current financial year, we had the very hard lockdown and the I can almost say the peak of the COVID-19 impact And we did see some pressure on our inventory as we could not turn our inventory as fast. And we also saw some pressure when we announced our interim results on our debtors. However, given the focus that we do place on both of these items, inventory as well as debtors, we are quite pleased to see that from our interim results, we have seen a meaningful improvement in our working capital to current levels. Also, just as a reminder, in terms of the billion rands worth of working capital that we have that relates to Altron 2.0, that does include the 300 odd million that is owed to us in terms of the transaction and the contract that we have with the city of Tshwane. We've already spoken about the disposal group as well. There we have about 800 million rands worth of working capital tied up, and that is certainly one of the objectives for us in the immediate term, is to actually collect on that working capital relating to our disposal group. When talking about our net debt, I think it is fair to say that the debt situation of Altron over the last 3 years has certainly been managed very prudently. We have refinanced our debt in February 2019, and the numbers that we reflect here does indicate how the debt has related or has performed over the last a number of years. And remember, the net debt that we typically have disclosed in the past would have been reduced by the cash that we have in Bytes UK. Now, from a debt to EBITDA ratio, we have always communicated that the ideal ratio for us is a ratio of 1, whereby our net debt situation equals our EBITDA. And from the number that we have reported at half year of roughly 2.6 billion, a couple of items have taken place that's relating to the Bytes UK transaction. The first one is we have received, let's call it out-of-cycle dividend from our Bytes UK OpCo, and we have used that full amount to reduce debt, and that is the 657 million that's reflected there. Then we also have received 867 million rand that relates to our portion of the Bytes UK dividend that relates to our treasury share. Again, the full amount has been used to reduce debt levels. So currently we are sitting at debt levels of just below 1 billion rand, having come from a peak only a couple of months ago at 2.6 billion rand. So it certainly has been one of the clear objectives of the Bytes UK demerger is to ensure that Altron 2.0 has a sustainable debt structure going forward. So maybe to put that in context, the EBITDA that has been reduced both as a result of the Bytes UK unbundling as well as relating to the disposal group is EBITDA of roughly about 700 million rand. So at a ratio of 1 debt to EBITDA, that means that 700 million rands of EBITDA was used to support 700 million rands worth of debt. But what have we done? So the EBITDA will decrease by about 700 million rand as a result of Bytes UK unbundling as well as the disposal group. But yet the debt that has been reduced from our Feb 2020 numbers is about 1.4 billion. So in other words, we have reduced debt twice as fast as the EBITDA that would be reduced as a result of we no longer having Bytes UK and the ultimate disposal of the disposal group. All right, so our target going forward does remain at 1, and we still would like to ensure that we have sufficient headroom to make bolt-on acquisitions when they do present themselves. But as Mteto has stated, that our growth would largely be organic, but we would avail ourselves to bolt-on acquisitions where they do make sense. If I can give a typical range, a recent history and the acquisitions that we have made of Carabina, as well as Ubusha, the ticket size that we would look at would typically be in the region of between 2 and 400 million rand. And just to conclude then, also on our debt slide, and that provides a little bit of evidence, the fact that our debt has been prudently managed, is that the debt numbers that's reflected here historically does include in excess of 500 million rands worth of acquisitions. Moving on to capital allocation, this is an important area for us. As we move into an organization that largely sells time and skill, and we move away from capital intensive assets similar to what Altron has had in the past, well, then the profitability metrics that we look at for us become more and more important. And we use the return on invested capital metric as a measure of how good we are in terms of efficient capital allocation. And broadly speaking, we think about our Altron 2.0. We think about these in terms of efficient capital allocation, those that have acceptable return on invested capital, those where we really want and need for them to improve. Then there are those that operationally the ROIC is performing at a satisfactory level, but we would like to scale those, and we need to scale those in order to generate a return on the goodwill that we have paid for those assets. And then we also have a watch list category. Clearly, these are areas where the performance and the return on the capital invested is subpar, and we have to have interventions in order to elevate that to acceptable levels. So if I can just go through them and share our thoughts on these assets in terms of capital allocation efficiency, then you'll see the very first one that we have there is our Altron Managed Solutions. And here, although that business is performing very well in a very competitive industry, the amount of assets and capital that we have invested in terms of working capital is just too high. So this is an area of the Managed Solutions business that we will pay particular attention to in order to generate a higher level of return on invested capital. Nexus is another one where we are not satisfied with the ROIC or the return that we're earning from that asset, but we also have to acknowledge that the 300 million that I've spoken about relating to the COT is trapped as part of the invested capital. The moment we receive payment of that 300 million rand debt, that will lower the invested capital and will immediately boost the return on that asset to a level that is on par with our weighted average cost of capital. So that is the immediate milestone that we would like to achieve within our Nexus business. Our Altron System Integration business is performing at a satisfactory ROIC above cost of capital, but would we like to have better returns out of that business as we move into the higher value offerings that Nteto has alluded to? Absolutely. So therefore, we see Altron systems integration being reflected in both categories as acceptable, but with a clear expectation that we would like to improve. Altron Security here, it is definitely performing at an acceptable level. It's performing in line, if not slightly better than the business case. But because of the goodwill and the multiple that we have paid for that business, we really want to scale and need to scale that business to generate a satisfactory return on the goodwill that we have paid for Ubusha. Altron Caribbean, that falls squarely into the improved category. The returns that we have generated from that business is far less than satisfactory. And again, this is the year that we need to generate the returns that we expect from that asset. Netstar is similar to system integration, performing at an acceptable level from a return on invested capital perspective, but definitely there is work being done with that team in order to see how do we unlock even more value from the Netstar operation. And then we have always been proud of the returns that we generate out of our health tech and fintech business. Here it's where we own our own IP. The margins are much higher in this type of business than reselling someone else's IP, and it's a very capital light business. So this is the ideal ICT asset that we would like to have, and there the return on invested capital is performing at an acceptable level. Hopefully that provides some color as to how we think about our capital allocation going forward. So that brings me then to what would be the focus areas from a finance perspective in the next 12 to 18 months. So the first one is to realize the 800 million rands worth of working capital that we have tied up in our disposal group, right? So just to reflect back, the working capital demands for the broader SA operation has always been in the region of about 2 billion rand. We have reduced that substantially, but also if we can dispose of the disposal group, collect on the city of Tshwane, we can have an outlook of a working capital demand of about 700 million rand, which is significantly better than the historical trend of around 2 billion rand. I've already spoken about the COT debt. Not only will it help us from a net debt perspective, it will help us from a working capital perspective, and it will certainly help us to improve the return on our invested capital. So this, without doubt, remains a key priority for us. We've had positive developments with the favorable Supreme Court of Appeal verdict, and it is just something that we have to get done. I've spoken at length about the capital allocation efficiency. This is an ongoing piece of work that will be delivered probably over more than 1 year, but the key priorities here does relate to the turnaround of Caribbean, the interventions that we have to have in managed solutions in order to improve that ROIC, and then the scaling of our very successful securities business, which then leads me to point number 4 as reflected on this slide. We are very fortunate to have had a debt that was prudently managed, and it stood us in good stead during the COVID period. And to go within Altron 2.0 forward with a structurally lower debt levels at around the 1 billion mark means that there's an immediate saving on an interest charge that we would expect in the next 12 months of at least 70 million rand, which will certainly help us from a headline earnings perspective. And speaking about headline earnings for Altron 2.0, we also have a focus area on our tax line. Currently, our effective tax rate is creeping up, and that largely stems from the fact that we cannot recognize deferred tax asset as it relates to our Altron Nexus losses. So this is something that we are working on. We do have a plan around that. So both the interest charge as well as the tax charge will certainly improve the headline earnings for Altron 2.0. So having reflected on our focus areas and how we think about Altron 2.0 in numbers, that concludes my presentation, and with that, I'd like to hand you back to Nzinga.
Thanks, Cedric, so much for breaking down the numbers and also showing us where Altron 2.0 is going in the next 5 years. We're going to have a 10-minute break now, but please don't forget to send your questions through to the members of the leadership here in studio by typing them in the chat box. You can also send your comments. Please grab a cup of coffee or tea, and we'll be back with you shortly.
Keep connected with Altron's broadband infrastructure. Get linked networks, data centers, and storage solutions. Enable economic opportunities. Access public services. Altron, there when it matters. Take better care of patients with MediMass. Quickly access digital patient records. Better diagnoses with up-to-date patient information. Efficiently manage patient accounts. Altron, there when it matters. Keep your fleet on the road with Netstar Fleet Management Solutions. Real-time location-based tracking, 24/7 camera surveillance, maximize productivity, minimize costs. Altron, there when it matters. Get peace of mind with Netstar. Advanced vehicle tracking and recovery. Real-time traveling updates to loved ones. Wireless panic button and impact detection. Altron, there when it matters.
Coming up, presentations by Marius Achenbach, MD of Altron Security, Andrew Brown, Operations Executive of Altron Health Tech, and Andrew Holden, Group COO, will present on Altron Systems Integration.
Welcome back to our presentation and discussions on Altron 2.0. Thanks so much for the great questions that you've been sending in. Please do keep them coming in. We're now joined in studio by Marius Achenbach. Marius heads up Altron Security and is here to talk about the growth plans. Marius, very good morning and over to you.
Thank you, Nzinga, and good morning to everybody else. Firstly, thank you very much for this opportunity to discuss with you our plans for the Altron 2.0 strategy. I'm going to start off by talking about a couple of the major drivers that we see specifically in the security industry. And if we take the time back a little bit to about 12 months ago, one of the very first things that people experience when the national or the international, for that matter, lockdown was announced and the pandemic started was that people suddenly have to face with the reality of how do I work not going to the office, signing in at the front desk, sitting at a PC that's controlled and sitting behind a firewall, but how do I give access to my workforce in a way that I can do it from remote locations and in a way that I can access my information, which was another drive on the security demands of organizations. And very shortly after that, people realized in a hard lockdown scenario, how do I actually engage my consumers and my customers? And those kind of things immediately put a lot of pressure on the security side of them, of businesses and how they operate. Then secondly, in this whole period, we saw a huge acceleration of cloud adoption. It's something that was there before the pandemic, but it's something that we really saw picking up speed. And obviously, I'm talking from the concept or from the topic or the point of view of cloud security and not necessarily the cloud adoption process. But again, that created a lot of security demands in that whole process. That drives also the process. We spoke about the customers that suddenly had to deal with not having customers coming to storefronts, call centers being impacted, not being able to deal with customers that way, and also branches of banks, for example, and various other places where their interaction with their customers they were stripped from. And in cases like that, the less personal contact is something that social distancing was just enforcing. And if you look at what happened in this time, there's a much bigger demand for automation. There was a demand for self-learning, decisions being made more effectively and faster. And that less personal contact also drive a lot of things in the security industry. Now, that leads us to the topic of digital transformation. And in our world, I think from a security point of view, we talk a lot about digital experience. Now, obviously, in a world where you need to find different ways of interacting with your consumers and your customers, obviously that drives very strongly then your need for fast-tracking your digital transformation strategy. And not only for consumers, but also for the way that your own employees and your intermediaries and your suppliers is interacting with you. Now, in a digital transformation world, per definition, there is a lot more data being generated and data required to be shared, which led us to the last point, and that is the issue of data privacy. Now, data privacy is actually three things. So it's firstly protecting your secrets in the organization, making sure the right information is exposed to the right people. It's very embarrassing and actually business harming if some of your information ends up in the hands of your competitors, for example. And lastly, and this is something we can't blame COVID for, data privacy from a legislation point of view is something that is very specific for South Africa, a very big topic in the sense that later this year people need to adhere to that legislation. Now, internationally and in Europe, for example, GDPR is driving things quite strongly. And here in South Africa, this is the year whereby companies need to meet the deadlines of POPIA. Now, basically, it says that you need to be responsible as an organization when it comes to personal identifiable information. And that is sort of the two sides of a coin here. Firstly, we want to expose and use as much data as what we can. And on the other side, there is legislation and things that's trying us to restrict the sharing of that information. So it's a balance, and we need to find that security balance in terms of using the data and actually making sure we treat the data we have responsibly. So I want to talk a little bit about security first in Altron in general. Now, firstly, security is not one thing. It's not one division. It's not one focus. It is part of everything we do at Altron. Then secondly, we need to decide security is part of solutions in two ways. Firstly, we lead with a security solution, and that's what Altron Security would be doing. So we are going to market with a security solution as the lead of what we talk to customers about. But also security is very much part of a lot of solutions, and it's a critical part of most solutions Altron is taking to market. So from combining the skills in a one Altron, there is virtually no modern security need that we can't address for our customers right now. As I said, Altron Security is mostly focused around leading with a security solution, but we are leveraging the vast experience and skills within the group, expert level skills when it comes to the areas we touch with security. Then lastly, security is not one thing you do and implement and it's done. It's an ever-evolving maturity model and a path that you are walking to reduce risk. And we see nowadays with this new security economy that's opening up, that security is playing more and more a role where it's enabling businesses. And I'm going to touch a little bit more on that a little bit later. If we look at Altron Security, our focus on where we want to put our investment into the future, we're going to start off by saying we have got ambitions and we are working hard to be a next generation security solutions company ready for a vast evolving new set of needs that our customers has got. We find ourselves being very well positioned. We are a company that in the security identity space have led that space for a long period of time, and it puts us in a very good position to actually adopt these new needs of our customers and react to what our customers' needs are going into the future. The second point I want to make is that we are focusing on the proactive, preventative side of security. And what I mean by that is we'd like to engage with our customers, understanding their security challenges, their landscapes, help them implement security controls, and in that whole process help them monitoring that, at the same time trying to play that preventative space. We also want to help them by implementing tools with which they can manage their security landscape. And that leads us to the next point. We also very much would want to assist and is assisting our customers in increasing their security postures and the way or help them reduce their cyber attack surfaces. Now, obviously, this is critically important if we remember the drivers in the security industry. All the things we described there is actually driving a lot of change and digital change. And for that reason, it's very important that we establish security frameworks that is robust enough, that allows for that scalability, that everything you do doesn't have a long, strong security component, but that is falling into that framework. And that's the future we see and what we define as next generation security. You need to cater for things like a DevOps environment where people are developing solutions very fast and effective and in a very short increment cycle to their consumers and their customers. And for that, you need a very strong security framework that caters for all of that. And then lastly, I've alluded to it already, security is getting to a space where it becomes a business enabler. And it's very nice to play for a change in a space where, as security, it's not only a grudge purchase, but it's something that is now enabling us to do something that was not possible in the past. And specifically, as an example, in the consumer space, it is now possible to do a whole lot of things what was not perceivable possible in the past, like enrolling somebody very strongly and very securely in a way that doesn't require any physical interaction. It's just one example. If we look at Altron Security and how we operate and where we are right now, I just want to take you very quickly through what we're busy with right now and what we're seeing right now in the industry. Now, firstly, Altron Security have always been a company that put identity at the center of everything. We were identity-centric for the last 18 years. What we see in the industry now today, that in the last couple of years, everybody now is talking about identity centricity when it comes to security. It's something we're very used to, and we've built our thoughts and our ideas and our future all around the fact that identity is central to everything we do. So that suits us or puts us in a very good position to be able to adopt to this new economy that's busy unfolding. We specifically in the identity space of our business have seen a huge growth, exponential growth in the security that's relating to consumer and identity and access management systems. Now, that's typically driven by digital transformation, where a lot of businesses are making big moves in this social distancing COVID era to actually create ways to interact with their customers in a different way. We believe it's something that's going to stay, that distancing, social distancing may go away, but the way that people are getting used to this new way of interacting is something that we believe is going to carry on after the pandemic ended. Then secondly, we spoke a lot about data. Data is nowadays becoming probably one of the biggest assets of companies out there today. And that data is exponentially growing. It's been used to make predictions about how you interact with your customers. And at the same time, there's legislation that is talking to us in terms of how we should be dealing with data, etc. And it's not only papaya, there's other legislation in South Africa, like King 4, that's also very prescriptive in how you actually deal with organizational data. If we look at the cloud side, and again I want to point out, we're talking about cloud security, not the general cloud adoption and cloud strategies, but cloud security, as that adoption is accelerated, we're seeing a lot of emphasis that needs to go into that security. Lastly, managed security services. In a world that's so fast developing, and that's picked up speed in the last 12 months. So the security landscape has evolved much quicker than most other areas during the last 12 months. And in a space like that, there's also always a huge demand for security managed services. And the reason for that is very simple. Customers want to focus on what they're good at. They want to actually focus on what they take to market. And it's complex solutions that's going in place, and they want to rather have help and assistance with, from experts to help them staff their teams and also help them manage their services around the security side. So there is a lot of demand that we're seeing at the moment picking up there. And I just want to say very quickly by numbers, if you look at Altron Security, we've got 50 enterprise customers, mostly South African based, but some of them internationally as well. We've got over 125 certified professionals in the security space. We've got 15 partnerships focused on enterprise scale and assisting us in building these solutions out. And if you look at our managed security services side, we're boosting very good certifications in that space in the form of ISO 27001 and PCI DSS is level 1 certification. If you look at our customer base, we are very fortunate and blessed that we have a customer base that is really a good customer base to have in these tough times, where we can learn a lot from. And in my next slide, I'll explain why that's so important. But playing majority of our business comes from the financial, insurance, telecommunications space, and that is a very good space to be able to evolve these solutions going into the future. If we talk about our future growth, the first thing, and coming off that previous slide, is to say, I've said we're fortunate. We are at the moment working with major banks in South Africa and insurance companies, assessing what their needs are in this economy, a new economy change in the security space. And I want to stress there, our absolute focus is going to be and is to do solutions and provide the right solutions in the space where our customers has got the needs. It so happens that these areas, as Mteto has referred to earlier too as well, is in the high growth and high margin space. And we are fortunate that we're sitting in this identity security space that gives us a great opportunity to be leveraging our knowledge, our expertise, to be able to accelerate in this new modern next generation security landscape. And then lastly, obviously, we are looking at the research companies, the Gartners and the IDCs, and most of the things we do, or almost all the things we do, is very much part of the growth areas, and the areas they're predicting is going to be the key areas to focus on into the future. To that extent, this is a slide that was produced, modified. It's a 5-year outlook of the security market, modified for post-COVID numbers. So this was produced 22 April in 2020. So it's already got a little bit of a downgrade in the growth factors there. And this research from Gartner says the security market in South Africa is in the region of $900 US. If we look at the 5 areas on the right-hand side of the slide there, the first 5 lines there, that's the areas we want to focus on in Altron Security. Identity and access management, consumer service software, and you'll see that there's huge numbers and growth numbers in the consumer security software space, data security, cloud, infrastructure protection. On the infrastructure protection side, we're not interested in the entire area there, but very specifically in threat intelligence area specifically. Now that software addressable market we reckon is in the size, or not we reckon, Gartner says is in the region of $371 million US, and we believe the attach services to those markets for solutions around that software components is in the region of $170 million US. All the solutions we're targeting from Altron security point of view is at least beating inflation with a heavy margin or growth in the country, and the vast majority is in double-digit growth areas, which bodes well for the future and what we're planning. Gartner, and this is also again a slide from Gartner, updated their trends for 2021. This is a document that came out in January 2021, and they say there's three major themes when it comes to what's going to happen in 2021. The first theme is people centricity, and as I said previously, our whole business has been built around identity centricity. So people centricity is going to be very important, and there's very interesting things coming out and what they describe there. Internet of behaviors is that process of gathering what they refer to as internet dust or behavioral dust or digital dust. And that's a process of figuring out who a person is based on his social profile, based on social media, based on information you capture about that person. And that has been used to target, market a person, or to be able to know who you're dealing with and use those to the benefit of providing the right service a customer or a consumer wants to see. Total experience strategy is not only true for consumers and customers, it's also for your employers and your intermediaries, maybe the brokers in an insurance firm, and it's for the suppliers to businesses. So that whole total experience around identity is driving a lot of this. Then if we look at location independence, I'm not going to spend too much time on that. That's very obvious. I think the whole COVID pandemic has driven distribution cloud anywhere operations, and as what I alluded to, the cybersecurity mesh is a way of accessing things that lives wherever it is, whether it's hybrid cloud, local, in your data center, public cloud services. You need to cater for all of that. And then the last point is always driven by a pandemic or a recession even, is resilience. And as I explained to you, businesses' resilience for operations was heavily tested with the world on lockdown. And that has given birth to a lot of attention being given to things like AI, artificial intelligence, machine learning, robotics. And if something can be automated, it will be and should be automated at this stage. So that's their prediction and their trends going forward. Now, I'd like to spend the last 5 slides just telling you a little bit more detail about the specific things we are doing. So the first one there is Zero Trust, and maybe I should explain a little bit what Zero Trust is. Zero Trust is very simply applying the right level of security at the moment that you want to interact with a system or request information or want to do a specific task. So that's plainly what it is. We're in the business of doing that. We're the market leader in the zero security trust space, and it's mainly focused around identity and access governance and management, and also around privileged access, those special accounts that people use to log into databases and various systems, etc. Now, that needs to be expanded to the cloud world, and we're trading a world where a desktop that's locked down in an office, tightly controlled by an employer, is now being a device that is not tightly controlled, coming in from anywhere. So in that specific space, a lot of attention needs to be given to that new emerging world. We are in the process of evaluating new vendors that specifically plays and help us with solutions in the artificial intelligence, machine learning space, and we're already POCing a couple of cases, and we expect a big growth area in that specific case. A lot of people in this cloud adoption is also asking us to do migration of their security services and tools to the cloud, and there's a big drive for us this year to assist our customers in that migration to manage security services and also to run more exclusively in a central cloud environment. And then lastly, there's a big drive for access from anywhere. And access from anywhere is not necessarily only for your not only for your employees, but it's also focused around consumers and anybody you're interacting with. And then lastly, there's a strong investment we're making into securing the interaction. If you're coming from a device that is not that tightly controlled, sitting outside of your typical security parameters in the organization, it's very important to combine that zero trust capability with also then interacting that session. I'll allude to that again, and I'll talk a little bit about that on the 2 slides down the line, but it's also in the case of making sure I identify the person that's on the other side of that session clearly and to exactly the right level. Then secondly, we spoke about securing digital transformation, and this is about, for us right now, I explained to you, we've had a lot of growth in the consumer identity and access management space, but also imagine now the way that things like government needs to interact with their citizens. There is a huge growth opportunity and a lot of capabilities that is going to be added in this market. And we're investing a lot in finding these ways to have these interactions with consumers. We've referred to that as a G2C type model. A picture, and maybe want to give a quick example. Picture somebody that wants to go to a financial type institution and wants to request some information. Obviously, if you rock up there, good practice is to say, I'd like to know some details about the person requesting this information. Now, rather than giving this person a long form to fill in with details on, you literally ask the person and say, I see you authenticated, for example, to Facebook. I see you authenticated to your Office 365 environment. Give me permission to use those credentials just to share your public profile and register you. Nothing to do with you. You just give me permission. I register you and I can keep track of who I gave this information to. If, for example, you come back a week later and ask for a formal quotation, I can actually say, and let's make up an example here, we can say that I require something like your age to be able to give you a proper qualification. I can ask the person for one piece of information, which is his ID number, which I can then check against things like our back-end systems like Harness, and I can literally create the profile with the person's full name, his ID number, his age, for example. And with that way, without asking the person anything more than his ID number, I filled in a much more complete profile. And if this person wants to interact with me and I have a requirement of registering this person or performing a FICA process, if it's a bank on this person, I can now do that electronically by converting passwordless the information I have next time the person wants to transact with me. I can convert that now into a verification process and make very sure that the person which is provide me the ID number is really the person sitting on the other side of that session. We call it ID proofing. And it's done by using biometrics as a service where we can use fingerprints on a phone, for example, and facial recognition to be able to check that against our national database. So that is an example of how consumer identity and access management can change the world for the consumer. Rather than filling in lengthy forms, creating usernames and passwords, you can actually do all of this nowadays electronically. And an example I've given you, you only had to provide one piece of information, which is your ID number. Think about these solutions in the context of government to consumer or government to citizen. Think about it around e-FICA processes. We see banks today already been enrolling people very strongly. Think about any documentation in the future that you may want to sign, signing that bond application, signing that deed documents that all currently have to be done in ink. Those are the areas that we're investing in the future. We spoke a lot about data privacy, and as I said, data privacy is something that we see so much potential in. We're splitting that out as a specific focus, as a division inside of Altron Security, and we're going to run that process. We see a lot of potential in there, specifically around the legislative side of that business. We spoke a little bit about cloud and edge, and cloud is about, mostly in layman's terms, centralizing everything, but also in that whole process where everything is available just seamlessly for access, wherever the person is at access. Some of that information sometimes needs to be closer to where that information is needed. And that gets us into the cloud edge space, where certain information is putting in specific places to be close to where they need to be consumed. In cases like that, cloud security and cloud edge security is quite important. And this is a development area for us and a huge growth area that we are investigating this year, assessing vendors and figuring out how to fill that landscape. Again, we think we're perfectly positioned with the current experience and relationships we've got to move forward on that. And then my last point is we refer to it as supporting initiatives. You've heard Mteto also mention that we have got ambitions and a drive to generate revenue from outside of South Africa. And we have registered, currently we have got an Altron Security entity registered in the UK that has been staffed with business development capability and technical leadership. And we were very impressed in a very short period of time of the pipeline that we've built up. We seem to find very good success and traction in the space of the public sector. We are leveraging very strongly partnerships with Phoenix and Bytes UK, in the UK specifically. They haven't in the past focused on security solutions, identity security solutions specifically, and we are with them going to market with some of those solutions. We are also expanding our technical capability. We have realized that in the new world where everybody is okay and happy with remote work scenarios, we found this market is coming to us. We want to use the lower cost base of having some of our technical teams in South Africa, supplement that to our business development and technical leadership in the UK, and in that way use the cost effectiveness of having a lower cost solution we can take into the UK market. What helps, we're in the same time zone and we speak the Queen's English, so that helps a lot against maybe other competitors that have got similar ideas from Asia, etc. So from that is our contribution, my contribution, and how we see the future. Thank you very much. And with that, over to Nzinga. Thank you.
Marius, it sounds like 2021 and going forward is going to be a year of real growth in the segment. Thanks so much for outlining those plans for us. A reminder to carry on, please sending in your questions and comments using the chat box. We'll have those presented to the leaders here today at the end of the session. Next up is Health Tech. In the hot seat now is Andrew Brown. Hi, Andrew. Nice to have you in studio.
Hi, Nzinga.
Health certainly is uppermost in everyone's minds at the moment. It's over to Andrew now to tell us how Altron Health Tech is going to make an impact in 2021.
Good morning, Nzinga, and good morning to all the viewers. Thank you very much for this opportunity. I am very privileged to lead a group of very passionate Altronians in the health tech space. Just to position us, health tech is one of the platform businesses. We develop our own IP, so we research, we develop, we sell, we install, and we support all of that IP, and I'll explain a little bit about that as I go along through my presentation. And then the other thing about us, quite obviously, given the name, is that we are very much focused on the health industry and the health vertical. So what am I going to talk about? Firstly, I'm just going to go through who we are and what we do as a business, just to get everyone on the same page, so to speak. Then look at some of the market forces that have been affecting healthcare in the last while, and the emerging trends and the opportunities that those represent to us as an organization. And then talk about our strategic plans and how we will respond accordingly. So, who are we? Right, well, the health tech division is made up of three sort of subdivisions, so to speak. Two of them have been around for many, many years, in fact, upwards of 25 years, and that's Medimass, which has been responsible for providing doctors' practices with practice management applications, so effectively the software that's on the desk of the receptionist or the doctor in the actual practice itself. Then there's MediSwitch, that has been responsible for taking a claim from that practice and delivering it successfully to the medical scheme so that the doctor can be paid for the services rendered to the patients. And then the newest part of our business, MediServe, is a bureau service, where effectively what we do there is that we do all of the back office admin work for a practice so the doctor can focus on patients and we will look after the back end. Geographically, we're very much focused in Southern Africa, our main business being in South Africa. We do have a company in Namibia, MediSwitch Namibia, and that business has been there for over 10 years and has been very successful to date. We also have presence in Lesotho, Swaziland, in Botswana, and a bit in Mozambique. Our purpose, whilst underpinning delivering innovation that matters, from an Altron perspective, is also about connected healthcare wherever you are. And what do I mean by that? So, in order to illustrate this process, I'm going to use a traditional patient journey. Everyone who's watching this has been a patient at some time in their life. So, imagine you wake up in the morning and you're not feeling well. So you pick up the phone, you make an appointment, you hop in your car, and off you go to the practice, okay? When you walk in, you say hi to the receptionist who hands you a clipboard, and you write in some details there, demographic details, medical aid details, etc. She then captures that into a computer system. She will also create a manila folder for you, okay? If we're talking about a paper-based system. And that will become your health record for that specific practice. You go in to see the doctor, he or she examines you, checks out your symptoms, makes some notes, which goes into that folder, and comes up with a diagnosis. And then two things happen thereafter. The first thing is when you leave, you'll go back to the reception and you will either pay for the service that has been rendered, and you're given an invoice that you can submit to the medical aid if you are a medical aid member, or alternatively, it could be submitted on your behalf. Equally, you walk out holding a prescription. Okay, you drive off to the local pharmacy, hand that across, and the prescribed drugs are then given to you by the pharmacy. Okay, so I think everyone can identify this. So where do we fit in? Well, what we do is that we effectively can digitize this entire process. Okay, so we can facilitate an online booking so that you didn't have to actually use a call. We can facilitate online payments, which has become a bit of a new trend now in the whole sort of telehealth space. Because the patient isn't physically in the practice, it's actually better to achieve some level of payment up front, because the old model, quite simply, was once the patient had finished with the doctor, they'd go to the reception and they would pay before they actually left the premises. So this sort of adds a slightly different flavor to that. The other thing is that the patient can complete details online. You could have a video link to the receptionist in order to have any discussion about that, and the receptionist doesn't necessarily have to be working in the practice at her desk there. She could be working from home because our systems are cloud-based. Now, that manila folder that we talked about, that electronic health record, we have an electronic health record product, and that entire thing can be digitized, which means that the doctor is an ability just to log in, pull up any previous record that you may have, or start a new record. And equally, we have a solution for telehealth, which means that you don't actually physically have to have gone into the practice, but you could be doing a video link using your phone or tablet or computer with the doctor. After that, the claim can be submitted electronically via MediSwitch through to the medical schemes, and we switch to over 80 destinations in South Africa. And equally, the script could have been, the prescription could have been captured by the doctor electronically, sent through to a courier pharmacy who could in fact then deliver the drugs to your doorstep. So the entire process could in fact happen virtually, and we have the technology that is able to enable that. Now, that's very much a private sector setting, and we'll get to public now. But just in terms of our base, we have as an organization been pretty focused on the private health in South Africa, and we service upwards of 16,000 practices. You'll notice there that 3,600 pharmacies. We do the switching for a number of large destinations, including Discovery, which means that every single pharmacy in South Africa makes use of our switching services. On the right-hand side, you can see there's some annual figures in terms of quantities of claims that we did. So in the last financial year, we did just almost 106 million claims were submitted from practices through to the various destinations, and that equated to almost 84 billion rands worth of submitted claim. Now, what's key about those statistics is that means that we have data, okay? And Mario spoke earlier about, data is an asset to an organization, and if it's something that can be leveraged responsibly and securely, then there's certainly things that we could do that can help healthcare in South Africa going forward because of all of that data. Right, so that's the one area, and that's the private healthcare sector. From a public sector perspective, we don't have a huge presence. However, we do have a solution that has been rolled out to over 50 practices, and what it enables is we can enroll and identify a patient using biometrics. We verify them with the National Department of Health's Health Patient Registration System, which is effectively the National Master Patient Index. And therefore, by uniquely identifying the patient, we are then in a position that whichever clinic that patient goes to, they'll be identified again, their record can be pulled up, and that care can continue. The clinical encounters are captured within an electronic patient record, and it's possible then to order laboratory tests, pharmacies, etc., etc. But crucial to the entire process is that because we're collecting data across a whole number of clinics, we can provide information about what's happening in that specific clinic, but also what's happening around the entire district. And this is lending itself to this whole idea of population health management. So therefore, in summary, we can identify the patient, we know which patient, which went to which clinic, saw which provider, what was ordered, and what their conditions are, and be able to extrapolate that up in order to report further. The other area that we are making big inroads to, and it's a big growth area for us, is the whole occupational health. Now, this is driven by legislation, and the patient journey, once again, very similar. Patient makes a booking, so you can imagine in a mining company or a automotive manufacturing company or a heavy industry, those companies by law are required to benchmark the health of their workforce and make sure that they're continually monitoring that health over time. So we can book the patient in, we can manage all of the clinical workflows through their clinics that they have on site. We can interface with all the diagnostic machines, so whether it's spirology, audiology, etc. All of that's captured into the central patient record, and we are able to provide certificates of fitness, which is signed off by the various clinical providers. We can also provide the legislative reporting requirement, and we can interface into the human resources system, which allows the HR and human capital environment to manage the workforce more effectively. So in summary, once again, identifying, benchmarking, capturing the clinical data, and being able to report on that effectively. Okay, so from a customer perspective, there are some of the industrial companies that we have provided solutions for. Our latest one is Impala Platinum, and in fact that project is currently underway. But VW and Toyota from an automotive perspective, and then we've got DRG Gold and Goldfields and Implats from a mining perspective. Netcare, interestingly, uses our solution for their outsourced OC Health solution. Okay, so now let's move on to some of the market forces and the emerging trends in healthcare as we've seen it. Mteto spoke earlier about the economy, and that in healthcare is having a profound effect. And of course, that is underpinned by the massive impact that COVID has had. So as an organization, we have been seeing lots of practices, a number of practices that are closing. Typically, it's either economic constraints, or we've seen an acceleration of the number of doctors who are choosing to retire. Quite simply, they're just saying, look, this is too risky to continue practicing in this way, and they are closing their practices. We're also seeing increase from an immigration perspective. And then the other one, quite simply, from an economic perspective, the practices are making insufficient money, they're closing down, and those doctors are joining the public sector. So there's definitely pressure in that space. The other area that we're seeing is that from a medical aid perspective, the number of members is either static or in decline, and we are also looking at the reports seeing that the members are buying down as far as their medical scheme options are concerned. The other pressure that is coming to the fore is this whole idea of alternative compensation models for doctors. The current prevailing system in the private sector is a pay-for-service fee, and it was interesting that during the Council for Medical Schemes private health inquiry, they identified this as being one of the key issues in the private healthcare and driving up healthcare inflation. And they were recommending, or are recommending, that there should be a move to more value-based healthcare compensation models, where it's more about the outcome and the health of the patients that will equal the compensation rather than a time-based thing. So in the private space, essentially what we believe is going to be happening is that there's going to be a consolidation of practices, because quite simply the practices need to take cost out of the system. Okay? These alternative compensation models are also going to drive the need for team-based patient care, because effectively what it's going to mean is a medical scheme, or NHI, could be saying to a team of healthcare providers, saying, here are a whole lot of chronic patients, let's say diabetic patients. You need to care for them, okay? We will measure you on the health of that population and the way that you treat them. But it's not just going to be a GP involved. It will be GPs and specialists and physios and dietitians, et cetera, who will all need to view the same patient record, so you have to underpin that with an electronic patient record so that they can contribute to that data and manage effectively the health of those patients. The next step, of course, is that data will need to be used, because now managing a practice is going to be very different from that whole pay for service and the team-based thing. So reporting across a practice and reporting across multiple practices or a network of practices is going to become key. So the insight that both the payer, the medical scheme or NHI, or the people running that particular practice are going to need to understand and run their business better. And then finally, we are seeing this sort of evolving work patterns driven by COVID, more telehealth, and the requirement to be able to work remotely, access data remotely. So it's that whole sort of cloud, the promise of cloud and the ability to access your information and your systems wherever you are. So from an Altron Health perspective, all of this represents opportunity in the sense that we are now developing solutions for consolidated group practices. We're investigating these alternative compensation models, and we are looking and using our data seriously in order to provide the type of dashboards that are required in order to service these practices. And we are moving our solutions from the desktop into the cloud. In the public sector space, COVID has highlighted the need to accelerate NHI, but NHI also states that the focus has to be on primary health care. And they're looking at 80% of care should be happening in the primary setting. So once again, getting back to our solution, can we uniquely identify a patient, understand where they went, who they saw, what they were diagnosed with, and what tests were ordered for them in order to manage that entire ecosystem and bring that data up in order to provide the population health management that COVID, we can see, has shown that is a vital part of managing a pandemic and, frankly, all of the other chronic diseases that our population suffers from. So it's not just COVID that needs all of that data, but everything else that we are dealing with. And then, of course, from an Altron perspective, we firmly believe that from an Altron Health and with the capabilities of the rest of Altron, what can we do to help the public sector deliver better care to the patients and the public of South Africa? But we're not just going to be focused on South Africa. We are also looking at other areas in South Africa, leveraging what Altron has in that space. These statistics from the World Bank just showing some of the percentage of GDP. South Africa is the highest, but there are other areas where there is a significant investment being made in healthcare, and they are starting and have been putting in the legislative structures that our system supports. So what we effectively need to do is take the IP and the systems that we've developed in South Africa. We're going to have to tweak them because these are different markets and they're different legislative requirements. But what can we do about taking that and providing those solutions in other areas of Africa? So this brings us to our plans from a growth perspective. So the first thing that we are going to be focused on, we have to protect that base of practices that we've got, continue to service them well, provide them with a world-class service. We have to convert those legacy systems into cloud systems, and we want to grow our bureau service. Currently, it's sitting at around 200 practices. It is very much a growth process for us and an area that we can expand. I've spoken to some of the focus on markets, occupational health, a definite investment area. We continue to evolve our product and add additional features and functionalities. We are focusing in on the group practices because we believe there's going to be more and more consolidation of practices in South Africa. We will be focusing very much on the public sector, but the primary health area. We're going to look at our data in a meaningful way and make sure that we're going to start adding real value to that we can commercialize, but obviously in a secure and responsible fashion. We need to be very careful of that from a POPI perspective. And then we're going to be looking at that international expansion that I've just spoken to. And then just in terms of our platforms, moving our products continue to evolve. I spoke about the fact that we have our own IP, and therefore it's incumbent on us to make sure that we are continuing to invest in our own IP, making sure that our solutions are cloud-based, they are accessible from anywhere, that we can leverage and continue to offer telehealth and mobility as required. Okay, and then finally, just looking at, we're putting a lot of attention into our partner ecosystem, because there's certain things where we can partner with other organizations, which allows us just to bring value to our customer base faster. But equally so, we need to leverage the rest of Altron, the cloud computing, the cyber and identity security, digital transformation through Carabina, the payment solutions, the biometric solutions, because as a complete organization, we can add a lot of value within the health space. So therefore, just in summary, we want to capitalize on our existing base, continue to modernize our products, evolve our products to meet the demands of these alternative payment mechanisms and interconnected patient care, expand the public sector presence, expand our footprint outside of South Africa, and ultimately we would like to provide a superior patient experience that underpins that Altron is there when it matters. Nzika, thank you very much.
Thanks, Andrew, for taking us through the future of health tech. And thanks to those of you who are continuing to send in your questions. We are taking note of all of them and compiling them for our question and answer session that will take place at the end of this broadcast. Please feel free to send in your questions and comments, of course, through the chat box. Something now that's critical to all businesses: systems integration. Altron Systems Integration is up next, and here to share plans around that is Altron's Chief Operations Officer, Andrew Holden. Very good morning to you, Andrew, and over to you.
Good morning, Nzinga, and thanks very much. I'd like to say firstly that this is not my normal position in this sort of presentation format, but rather the MD for Systems Integration, Leslie Moodley, has unfortunately come into contact with someone that has tested positive for COVID, and although he's tested negative himself, we felt it prudent to continue to isolate, and therefore I've been put in front of the cameras, and hopefully I do justice to the systems integration environment, and any mistakes are obviously mine, and hopefully I'm not relegated to playing for the under 14B once Leslie's well enough to come back. So with that, I want to segment the presentation to 4 environments, looking around systems integration, what it means, the market position of systems integration, listening to our clients, and then the strategic focus areas going forward into the next 5 years. So let's have a look at why clients choose us and what is our real reason for being within the Altron stable and within the economy of South Africa. So if we have a look at why clients choose us, and there's 5 items up on the screen here, but I want to focus on 2 areas. The second round circle, client intimacy and passionate delivery. What we found these days is being close to the customers, being close to the customer goals is imperative to succeeding. If we make our customers succeed, then we too succeed. And then the last circle here is talent rich and exceeding expectations. In our systems integration environment, we have over 1,300 people, all dedicated to the IT environments, and I'll go through the segments in which they exist, but it's important, and there's sort of war in talent, and we're winning that war within Altron systems integration space. So with our reason for being, if we have a look at the exceptional client experience, our world-class operations, and we believe we have a competitive advantage within the South African economy. So with that, our real aim for our customers is accelerating their success by applying our processes, our people, and our knowledge into certain aspects of our systems integration environments. If we look at our go-to-market models, and what I'd like to focus on here, and we'll get back to the market conditions later, but what I want to do in the next 4 or 5 years with systems integration is really simplify the way we go to market and look at our deep level expertise. So if I start from the bottom up, the ICT operations for us in systems integration means the ICT outsourcing space, our services space, moving one step up into the hybrid cloud solutions. What it is in the hybrid cloud solutions that attracts us is, in the old days, we used to talk about infrastructure solutions, and 2-3 years ago, we started talking about cloud first. But we've come to realize that the environment, it's going to be a hybrid. It's going to be a hybrid between public cloud, private cloud, and on-premise solutions. So therefore, the movement and the ability to move in and out of the cloud environment, whether it be private cloud and public cloud, is very, very relevant. Enterprise security. Now, why we put enterprise security on this is that Mario spoke very eloquently around the identity access management and managing the data and the access into the cloud environment. We still need the perimeter security. We still need the access layer to get into the buildings, biometrics, and identifying the individuals who's allowed in to our environment. So still a very important environment, and that always goes down, as well goes down to the desktop environment. We spoke about application in some of our previous environments. Now, what's happening in the world is we've moved through certain, call it roller coaster rides over the years, whether you centralize, decentralize, whether it's mainframe, whether it's mini, whether it's in the cloud. But one thing remains constant is those applications need to talk to each other. Those applications need to be integrated in such a way that they are presenting a uniform front end back to your clients and back to your employees. So very important space. Marius and Andrew before me spoke about the increase in the data, and this is data that is unstructured and structured data. So what is unstructured data? It is data like we are generating right now through these video streams. Structured data is what you do in processing some of your documents, and Andrew Brown spoke around, let's say, those forms that you fill in. Those will become structured data. So this data is growing exponentially year on year, and we'll touch on that a little bit later. And then very important to us is how our customers and how our employees view the access to their environment. So if we have a proper digital experience, and we've all been involved in ordering an Uber, ordering something from Amazon, and these are the customer experiences that everybody is aiming towards. So very important that we emulate the market and have people focused on that digital journey and that customer experience that we're all expecting. If we have a look at some of our customers that we work with, and I'm going to get back to some more detail around that just now, but this talks to the deep level expertise we have in certain markets. So if you look at the financial services and you look at all the names up there from the banks, some of the bigger insurance environments, and we typically deal with the creme de la creme in South Africa from a brand point of view. Now, this is not so much a brag sheet, but a trust sheet. These customers trust us to deal with them, and they entrust in accelerating their businesses with us. And it's important. And we look at the public sector environment, and we know the public sector environment has been marred with lots of corruption stories, a lot of mismanagement stories, but it still remains an important area for us to grow within our systems integration to deliver services to us as citizens of South Africa. It is behoven on us as an organization to select the right customers within that government sector that is worth working with, that can pay, and they have proper defined strategies and proper defined outcomes that we can then be successful in that space. One of the things around systems integration is also to have a look at who we represent, because systems integration would be taking these strategic partners that we looked at before and have a look, are we representing the right OEMs in South Africa? So we have a look at, in the top line, that customer experience. I mentioned Amazon before. We look at Google Cloud, we look at Microsoft and Azure. We look at, in the next layer down, the data side. We've had a long-term relationship with Teradata, and that is proven more and more relevant as we go forward into these big data lakes and managing huge, huge databases of data. We look at SAS in NVIDIA, down into the application layer, looking at VMware in assisting us from running these big data center spaces, Kronos from a workforce management space, down into enterprise security, Dell, Cisco, still relevant, hybrid cloud, Cisco, and all the way down into the ICT operations, the typical LAN and the desktop and the server environments. So who's who on this slide? And we have great partnerships that have lasted very many years. If you look at Cisco, we've been a gold partner of Cisco since around about 2002, so 18 years, and this continues to grow and accelerate. Microsoft is maybe a little bit of represented or in space within the systems integration, and certainly a focus area which we want to grow. AWS and ourselves has a great developing partnership over the last 2 years, and we see that partnership growing from strength to strength. Have a look at some of the significant wins. Now, these, yes, could be seen as a typical brag sheet, and I'm not going to touch on these customers specifically, but what's important for me to convey along this slide is these customers are truly representative of a number of things within systems integration. If you look on the top left-hand side, we have customers like Illovo, customers like MultiChoice, and these customers have been with us for over 20 years. But one thing I'd like to leave with you is the relevance of Altron and Altron systems integration to these customers right now. So as we look at the COVID pandemic, the subsequent lockdown and the economic hardships that we faced, and these customers are not only running out their contracts with us over 20 years or still working with us, but placing more work with us. They are filling up our order books. Why? Because we are still relevant today, as relevant as what we were 20 years ago to these organizations. We are still relevant right now. Look at Safaricom in the middle on the right-hand side, Safaricom Kenyan-based customer that revolutionized the way they interact with their customers, that digital front end, that digital thing. Here we used technology that we had within the environment, OEM partnership that we've had for 18 years or so, and we delivered a new customer experience for them within Safaricom from South Africa into Kenya. Look at Vodacom in the bottom center of the screen. Continue to work with us in their own customer experience management, their own data management. Several of these clients have not one string, but multiple strings from us. And the numbers that you see up there, and I'm not going to go through the numbers, but the numbers that you see up there are not lifetime numbers, but rather numbers that have been placed or orders that have been placed in the past 12 months. So very vibrant environment, growth environment, and relevant and trusted by our customers. Look at the marketing position for a moment. And the first slide, and there are lots of numbers on the slide here, but the first slide for me represents where we were pre-COVID. Now, pre-COVID, you've seen a solid growth of around 8.6% in the IT services market, and Umtheto's opening address showed that slowed down into about a 4.5% growth year on year. But one of the messages that we want to get across here is, if you have a look at the areas that we've outlined in red, custom application development, the compound average growth rate in this space, 19.2% pre-COVID, even if it's halved, that'll make it around about 10% growth environment. The cloud environment off a very, very low base, growing at 16%. Outsourcing, which I spoke about, the services market, only growing at 5%. But the relevance here is look at the size of that market, 17 odd billion rand by 2023 in that market space. So even if it's stagnant or have a slight CPI type of growth, it is an important market to grow in, and our objective should be the market share and not just sort of rising on the tide that rises all ships at the same time. Look at cloud services, relatively big environment, and this is talking about that hybrid space. 20% growth compounded year on year. And then you look at the IT services market as a whole, reaching around about 105 billion rand over the next 4 years. So certainly in the market space of South Africa, certainly the industry to be in and invested in. Post-COVID, so what's happened within the COVID environment, slightly different view. And if we have a look at our segments that we focus on within the market space, look at the top segment. The top segment, finance, was growing at, and this is IT-related spend by vertical. So if you look at the top segment, finance was growing at 4.5%, and it slowed down to 0.3%. But it is still a growth area. You'll see the government environment slowing down from plus 5% to contracting this year at minus 2%. Communications, still a growth area, 6% before COVID, nearly 3% post-COVID. You look at some of the other environments that have been negatively affected, manufacturing, retail, and so on. And fortunately, systems integration does not have a lot of players in that space. And my view is just drawn to that healthcare market, and sort of to link to what Andrew said in his closing slides here. Look at IT and the spend and the growth in the healthcare space. Accelerated somewhat by COVID, 4% pre-COVID, 4.1% post-COVID. So the message for me on this slide is our deep level expertise that I spoke about on slide 1 is relevant for this market going forward. And COVID and the impacts of COVID in the economy of South Africa, and certainly within Altron, are going to be with us for a while. It's up to us to make them a positive impact within and where we apply our skills and where we apply our knowledge and investment into delivering the needs of our customer base. So if you have a look at some of the responses, and I'm going to spend a couple of minutes on this slide, because this slide is really at the core of what's changed, and particularly over the last year, and what we see accelerating to the future. So on the top line here, improving the customer experience, and we spoke about that digital journey, the customer experience management in that space, reimagining the way we interface. And this links nicely into what Marius was saying before, the zero trust environment, always verify. But the always verify is that at that moment that you go into the app and you say, I am Andrew Holden and I want to interact with you, Mr. Bank, and it's that zero trust environment that we then need to verify. And what's important in this space is systems integration cannot do all of this stuff by itself. So how we interact with Altron Managed Services, how we interact with Altron Security, how we interact with Altron Carabiner is very much at the core of where we're going. And if you recall the One Altron strategy that was launched somewhat 4 years ago, at the center of that strategy, the center of the 20,000 customers that we had, was one of collaboration. So what our customers are still asking for us is deep level expertise, but a broad enablement ability that we can deliver, not the sort of the vertical or the single solution, but a totally integrated environment that they can trust who they're giving it to, and they can trust that there's an outcome in a certain time within a certain budget. Now, if we have a look at why they're buying and how the customers are consuming these days, the most relevant change for us at the moment is the consumption models and the time to value. And what's accelerated in this space is certainly the consumption models being more pay as you go, pay as a service. Andrew spoke about the change within the healthcare space, but so too the things like Azure, Amazon have also driven this sort of pay as a service. The real change that we found and the real success in the last 12 months for us is the rapid time to value. Now, what that means is 5 years ago, people were still focusing on creating a long-term strategy, and particularly the IT enablement of that strategy. So a 3 to 5 year environment, you would start investing and have multiple phases of investment over the 5-year period. What's changed now is people need that return on that investment within weeks, within months, within half a year. So the chunks of what people are awarding now have become smaller, but certainly quicker. making up their minds faster, awarding the contracts faster, and expecting that outcomes faster. So if speed is at the center of what you're doing, who do you go to? You go to people that you trust, people that you've done business with before. And that's one of the strengths of Altron, because we have done business before and continue to do businesses with 20,000 consumers, not consumers, enterprise companies in South Africa. So where we're going into the future is, alongside those growth environments that I spoke about earlier, is local ICT talent. As we accelerate the war on talent and we can work from anywhere, it is important that we win that battle and be able to attract and retain the correct skills for right now within the South African base. Important for us in that application space, that development space, what we call DevOps, that we are successful in that space. We've got over 500 people in the DevOps environment, and we continue to apply that knowledge. And this is rapid development, this is lean. It's a changing world, but we also need the access to that skills. And I'll talk a little bit on the next slide around the expand data and the AI environment. But I think it's also, we need an integration partner in South Africa that can really dominate that hybrid cloud environment. Someone that can take, not only sell you a server or a storage environment, but also be able to transfer that into a private space, to contract with the right service providers that are providing space in data centers, and also take you in and out of that public space. And in and out of that public space is important, because that flexibility, what's right for your customer right now, might not be right in a year's time. It might change from one service provider to another. You might want to bring your public cloud infrastructure back on site because things have changed in your world. So it's important, and and that's one of the biggest spaces that we've seen under the services look forward into 2023. That environment is going to be 17, 18 billion rand that we need to tap into. I said just now we'll talk about data. So this is a period this is a view decade by decade. And if you are as old as I am, you certainly remember the 2000s, that we first started imagining the internet explosion, the e-commerce platforms that were developed. And have a look at the bubble around infrastructure and the importance of infrastructure. Data was a very small part of it, because what we were doing in the early days of the internet, of the .com boom, was transacting. We were taking things like Amazon Web Services, started out in those early days, digital books and so on. And it was about the application, but the infrastructure, it was about access to your environment. Data's played a very small base. If you have a look at moving in a decade later in the 2010 environment, what's changed in that space is data became more important. Infrastructure less so, and the applications took a key leading role in how we interacted with our consumers out there, and it was where everyone was focused. And this was the rise of a lot of the ERP environments, a lot of change, a lot of centralization of application modeling and power. And where we're sitting now and going into the future is not so much about the infrastructure. Infrastructure is still important, but infrastructure is not what we see. It doesn't matter where you are, public cloud, private cloud, on-prem, where your people are working from and to. What's important is how you access in that environment. So you'll see the application bubble slightly bigger than what it was in the previous decade. But certainly look at the data side. Now, our strength in the data side isn't about just putting a server down there that can store the data. What's important about data is that you can store it, but you can store it safely. You can give access to that data, who and where and when people require that access. And what's more important for us is what you do with that data. We spoke briefly in one of the previous presentations about the access to data is important, but it gives you valuable insights to what you can do in the healthcare space, into the fintech space, into retail space. If you have that access for data, you mine it correctly and you give the answers to the correct people at the correct time, a hugely positive influence on your business going forward. So if you have a look and you remember what I've said earlier about our structure, we have infrastructure, we have the services that follow the hybrid clouding space. So we've covered these trends. We have the DevOps environment, we have the Kronos or the workforce management environment, and we have a very, very big data and data analytics team sitting within the systems integration and exactly matched to where we see the future of IT, and particularly the future of IT in South Africa. So if we have a look at the growth plans, and I must pause here and take a breath, but I thought 30 minutes was a long time to do a presentation, and I can already see I've been going for 20 odd minutes. So these are the last 3 or 4 slides, and it depicts our journey as systems integration over the last 4 years, and then in the next slide I'll talk about our journey coming up in the next 3 and 4 years. So when we started this journey, and Mteto joined us in April 4 years ago, so nearly his anniversary, but what we set out to do is to fix the systems integration environment. So fix doesn't really mean that there was something wrong, but something that had to be revitalized. So we had to revitalize some of our infrastructure businesses. We had to re-engage with our OEM partners and be relevant to them as well in their space, and we had to exit the things that we were doing that were non-core. And so Mteto spoke about the held for sale assets, but likewise in each of the companies and relevant to SI as well, there were some things that we were doing in SI that we shouldn't have been doing, and we've successfully exited those environments. We had a look at our customer focus, putting the customer at the center of what we're doing, understand the customer, listening to the customer, and then we strengthen our technical skills and we strengthen our ability to deliver through a PMO. We looked at the double down environment. Now the double down is obviously investing into the high growth environments, and again here you can see centered around data, centered along security, application development, and certainly that hybrid cloud. If we have a look now, this is, let's call it a time depiction of the same. So I'm not going to go through the same environments, but have a look at the last block on the right-hand side. And the last block is growth. Now, the growth, continued expansion into Africa. We can take these skill sets, the learnings that we have, and apply them into our 6 geographies in which we operate already in the rest of Africa. And those are Mozambique, Namibia, Botswana, Kenya. We have a growing area within the UAE, not typically associated with Africa, but we bundle that with our African growth environment. And then the European growth is important for us. And I know Marius mentioned it in Altron Security UK. We have expertise in our favor in South Africa, and we have a low cost of delivery. And this morning the pound was trading a little bit over 20 Rand, the dollar I think it was around 14, 15 Rand this morning. And so how do we take that rich skill base and apply the work from anywhere? And why not work from South Africa and deliver services into the UK or deliver services into Europe? So that's important. And then as our customer base in South Africa, and if you remember slide 2 or 3, we spoke about the customer base here, and as that customer expands, and we're having a conversation last week in actual fact, one of our customers wanting to know how we're going to support their new acquisition in Germany. So it is certainly a follow the customer space. It's safer, we're known with the decisions are made out of South Africa, and you can deliver from anywhere. So at the core is a growth story. If you have a look at summary and I'm not going to go through the left-hand side, we've spoken about the focus environments, but today we have a real opportunity of aggressively capitalizing on our leading position. And our leading position doesn't only talk about our leading position within our customers, but our leading position as a brand. Altron has a very, very good brand out there, and people want to work for us. So if you've got people knocking on our doors saying, I would like to work for Altron because I believe in what Altron stands for, I believe in where Altron's going, that's a hugely powerful part of the story that enables you to attract and retain those skills. We're looking at this compound average growth rate of the 8.6 prior to COVID, 4.4 post-COVID environment, but still a market space that is a 106 billion environment. if we focus on our higher growth areas, so the cloud services, 29%, the customer application development space of 19%, and then we continue to concentrate in our deep expertise within the telecommunication, the multimedia space, and the financial services. So these are plans for the next couple of years, and we can see then the SI environment really fitting in to the plans that Mteto spoke about earlier today of sort of sort of teen growth, probably 10 to 15% growth, and this is what we would see growing in SI. Slightly smaller growth on the revenue, but higher growth in the operational income point of view, and that just dictates our growth up the value chain and our relevance to our market environment. So with that, spot on time, so over to back to Nzinga. So thank you very much, Nzinga.
Thanks so much, Andrew, for that interesting presentation. It's time now for us to stretch our legs a little bit. We're going to take a 15-minute break and we'll be back with more shortly.
Keep connected with Altron's broadband infrastructure. Get linked networks, data centers, and storage solutions. Enable economic opportunities. Access public services. Altron, there when it matters. Take better care of patients with MediMass. Quickly access digital patient records. Better diagnoses with up-to-date patient information. Efficiently manage patient accounts. Altron, there when it matters. Keep your fleet on the road with Netstar Fleet Management Solutions. Real-time location-based tracking, 24/7 camera surveillance, maximize productivity, minimize costs. Altron, there when it matters. Get peace of mind with Netstar. Advanced vehicle tracking and recovery. Real-time traveling updates to loved ones. Wireless panic button and impact detection. Altron, there when it matters.
Coming up, presentations by Colin Govender, MD of Altron Carabina, Johan Galantley, MD of Altron FinTech, and Pierre Brewer, MD of Netstar.
Welcome back, and as you've just heard, we're now going to go on to Altron Carabina. To tell us more about this, a warm welcome to Colin Govender. Colin, good morning, it's over to you.
Good morning, Nziga. Thank you very much. Good morning to everyone out there. My name's Colin Govender. I've been at Altron for the last almost 4 years, playing various roles, and I've joined the Altron Carabina business in the last 2 months and have spent some time with the business, understanding where the key challenges are and what we need to do about it. Prior to that, I was at a German multinational for 17 years in a systems integrator role. So today is an important day. I want to share specifically around some of my key insights around what I found in the business. Where does Altron Carabiner fit in with the greater Altron 2.0 strategy? Talk through some of the key market trends. How are we aligning from a Carabiner perspective around the key challenges that we are facing, and talk about positioning for growth. At the end of the presentation, I've got some key customer studies that I want to share with you to make it very pragmatic around what it is that we do. So very quickly, Mteto shared the strategy up front. Where does Carabiner fit in, and what are the key areas that we focus on? So very specifically, we sit within the digital transformation segment. The 3 key areas that we focus on are cloud services, data, and security. And this is all done with a lens of Microsoft. So everything that we focus on here is Microsoft from a 2.0 strategy point of view. So if we focus on the assessment of where we are, in the beginning of the presentations today, I think the key challenges were shared around where we stand from a Carabiner perspective, some of the key challenges that we face around profitability and growth, and there was some disappointment shared around that. Part of what I want to share up front is just give some context to where we are, and then what are we doing about it. So what's some of the background here? We acquired the business about 2 years ago, and what's important about this is that it was a profitable, healthy business at that point in time. Soon after the acquisition, one of the core customers that we had went through severe distress, and it accounted for 30% of our revenue. Timing of that, of course, was not ideal. And part of what we needed to do from a Carabiner perspective was to re-baseline the business. We then ensured that the integration of that business went straight into Altron. Part of the new challenge was, with this revenue now being lost, we needed to rebuild the sales engine and getting salespeople out there, ensuring that we bring the revenue in. Shortly afterwards, we were awarded the licensed service provider for South Africa as well as the multi-country cluster. Now, what is this? This is the licensing of Microsoft that we provide to our customers. And once that happened, we were the new entrant in the market. One of the core competitors that we have, accounted for 80% of the market share. So we were a new entrant coming in. We started with a slow acquisition of customers. We had some good success, actually, interestingly enough, in the education space. But largely, we had to rework the value proposition. We had to rework, because we are a new entrant, and leapfrog this legacy that's been sitting in the market. We came up with some new approaches. We got some very good lessons learned from the UK business that we started to bring into our space. We also then, as part of the One Altron strategy that's been alluded to earlier, we also started to engage with the existing Altron customers and started to farm and get more additional business and a share of wallet and expand our footprint in there. I'll share some examples about this a little bit later. Through this process, we also, with the sales drive, we landed some key ERP projects. But what happened there is these projects were landed, but there were key controls that were not in place. And we ended up with lots of leakage in terms of revenue as well as on the profitability side. So despite all this effort and these key things that we did, as it was alluded to earlier, the results were disappointing. We've also now onboarded brand new leadership, and together with this new leadership, we are now focusing on the key challenges. So what is it that we're doing about it? There are 4 key areas that we focused on. The first one is the cost base is really not aligned to the revenue that's coming in currently. And we executed on a restructure. We've rebaselined the business. We've ensured that we remove the key overheads that were in place that were not aligned to the growth strategy. Part of this restructure was a simplification of the business, ensuring that we meet our growth targets. And the last key area linked to this restructure is the business that's got an 80-20 split from a contractor to permanent ratio of people. Now we move that to a 60-40 to continue to de-risk the business. So as the cycles of the business change, we're in a much better position to be agile enough to respond to the challenges that we are facing. The second key area is, as we alluded to, these problem projects. We had some very difficult discussions with customers to re-baseline projects to ensure that we renegotiate them. And more importantly, we brought in some key leadership here from a project management perspective to ensure that we bring the controls in place to pick these things up way before the challenges hit us again. So absolutely critical area, and having that cadence in place to ensure that if issues surface, that we're able to respond to them in a much more industrialized way. The third area is the lack of annuity income. The annuity income is well below the 30% mark within the business at the moment. And part of our core focus here is pivoting and actually in some ways cannibalizing our existing business to transition some of the project work that has got short-based timelines into more managed services, into more annuity income. In this effect, with that restructure, we set up a discrete unit to focus on this, to execute on that, and to drive the returns that we need to increase that annuity revenue so that it de-risks the business from a sustainability point of view. The last area is really focusing on managed services and the smart skills area and transitioning some of the business into those areas. The last area is really on the software sales side. I think part of the challenge that we've had is we focused on the LSP part of the business, which is the licensed service provider, enterprise agreements. And as we've learned from the UK, over a period of 3 to 4 years, had a massive transition from LSP into CSP, which is cloud service provider. And that's really where the bulk of our focus is going to go into to drive the returns that we know that we can get from this area. We're also engaging a much lower cost element to drive sales, a lower cost acquisition of customers, to ensure that we deliver on the growth that's required. So this is a key area, and I'll share a little bit more as we go a little bit later. So in summary, these are the 4 key areas that we focus on to ensure that we deliver and bring this business back to profitability and growth. So what's happening in the market? Let's talk about that. And I want to share some context, and then I'll bring it back to, so what are we doing about it? So COVID forced things to change. I mean, my colleagues have shared some of the key changes that have happened, buying patterns of customers, how they've pivoted. But there were 3 key areas that I think focused and will drive our business going forward. Firstly, preservation of cash and optimizing of IT costs. Every single customer we spoke to was going through pressure and needed to reduce their IT costs. The second component was securing a remote workplace. As a business ourselves, if we had not digitally transformed in time, we had not been able to drive the business. And fortunately, we had done that up front. The last one is ensure resiliency. Now, part of this, these 3 key factors helped drive the cloud journey forward to ensure that customers can continue to trade and actually come up with brand new offerings. Now, in the way our business was impacted on this, of course, from a cost perspective, and some key decisions were deferred as customers went into different cycles, but it also created some opportunity for us. And I'll share some of these case studies with you later on as we go. The other important thing, just to share some key stats from Gartner, cloud is on the rise from an adoption perspective. Every single presentation you've heard today has alluded to that. Almost 70% of organizations plan to increase their cloud consumption. From a cloud infrastructure services spend point of view, by 2024, that number is going to grow from 44 billion up to 81 billion. And then lastly, by 2025, 85% of enterprises will have a cloud-first principle. Now, bear that cloud-first principle in mind, because it talks to a key shift that we as Altron are going to take around how we drive cloud consumption forward. Interestingly enough, through the last little period, Microsoft, who of course is our key partner, has released their results as at the end of December. Some key headlines from that point is that their revenue grew by 17%. And through this acceleration in this COVID world, we've seen a digital transformation being accelerated. For those people that were never used to video conferencing before, Teams, all of these key elements of collaboration, we saw a massive drive of digital transformation moving forward. And what was interesting is if you look at the Teams consumption, at any given point prior to COVID, there were 15 million users online. Currently, there's 115 million users online at any given point. So it's astronomical exponential growth that we're seeing in some of these key areas. Now, what's also important to note on this slide is some of the key growth areas that Microsoft is seeing. So if we look at the Office 365 environment, their growth of 21%. Dynamics, which is a core component from an application perspective, seeing a 39% growth. And lastly, from an intelligent cloud point of view, as well as from an Azure revenue point of view, there's an astronomical growth of 50%. Now, where's Microsoft focusing? So if you look at where their key priorities are, it's really simply defined as their 3 clouds and driving the consumption of those 3 clouds. They're driving a net new customer acquisition strategy and, of course, the adoption and increase around cloud consumption, because some customers have bought some of the software, but they're not using it. And part of their drive is to ensure that that consumption is increased. So if you take all of these things into mind, and you take all of the research and inputs and where we find ourselves as a business, where are we focusing? What are our key services and our priorities? The first thing I want to land with you around from a cloud perspective is that as Carabiner, we're adopting a cloud smart approach. Now, what does that mean? It is effectively taking a pragmatic approach to how cloud is consumed. Now, some customers are heavily invested with on-premise equipment. There's still depreciation sitting on their balance sheets. They can't just, rip that out, take the massive hit on their numbers, and move stuff into cloud. Now, where their key priorities are from a business perspective is what needs to be focused on. So taking those key business priorities in play and then matching it to their IT strategy, then you can start to use the cloud in an agile way to bring some of these services up. And I've got a case study I'll actually share with you a little bit later that talks to exactly how a pragmatic approach around cloud needs to be taken. So this particular slide now talks to who are we as Carabiner. This one slide sums up who we are and what we're about and what we're going to focus on. So of course, if you look at the left-hand side of the slide, we are focused from a digital advisory and consulting point of view. Our core focus is around these three clouds: managed services, expanding our customer footprint, and software services. So let's talk about managed services a bit. We are really launching some new offerings in this space around disaster recovery as a service, database as a service, and monitoring. We also, and part of our approach in the past was do a project and move on. Part of what we are doing now is we are embedding a managed service as part of an ongoing offering to bring that annuity revenue back into the mix. Then if we move to the three clouds, which is where Microsoft focus and where we are focusing, the first component around D365, there are a number of customers that are currently on-premise and are at the point where their investments need to take over and change. Our focus now is to move those customers into the cloud. The second component of the D365 stack is around Power Platform. Now, Power Platform is really an agile way for customers to develop applications and actually respond to changing needs in the market. Now, the traditional vanilla story that we used to play out where everything needs to be monolithic and exactly the same, there's an element of customization and custom code that needs to be brought in. This is the secret sauce that customers are looking for to drive competitive advantage in what they're busy doing. Then moving into M365 Teams, I mentioned this increase in consumption on Teams of 15 million active users to 115. There's so much more that Teams is becoming. It's becoming the center of everything. I mean, there's a quote coming out of Microsoft saying Teams will be the next internet browser. So all things, everything that you are going to be doing will then form part of this Teams story, and we are poised to take advantage of that. Then from an Azure perspective, which is then where some of the large growth comes from, is the transitioning of on-premise workloads into the cloud, but again, in a very, very pragmatic way. Mario spoke to the security component as well. That is such an important component. Now, some customers have got a diverse set of security products that they make use of, but some customers have invested heavily in Microsoft. And part of what needs to happen is the optimization and usage of those licenses that exist. We are partnering heavily with Altron Security to ensure that we take advantage of that opportunity from a security point of view. As you can imagine, across these three clouds, security is embedded and an important component of that. Then expansion of our customer footprint. We've had some good success with some of the existing customers of Altron, but we haven't done enough. And part of what we need to do is to monetize and drive a larger share of wallet with the key services that we can provide. The second component around that is driving the MCC, multi-country cluster, which is basically the rest of Africa. We've got an LSP and CSP license in there, and it's about driving that growth. We're investing in the countries, we're putting resources down in those countries to drive the growth that's required. And the last area is from a software services point of view. We are going to take multiple channels in play to be able to drive the growth story forward. And that includes telesales, direct sales, digital footprint in terms of the way we drive sales into our customers, and to ensure that we increase the volume. Part of this story will bring the annuity income that we need. As we shift customers from on-prem into CSP, that annuity income starts to drive and move forward. So this is Carabiner in a nutshell in terms of what we focus on and what we're going to be focusing on for the next period. So looking forward, I just want to share a few key case studies and to take all of this, the stuff that we've been talking about, cloud and applications, and let's talk in real terms. What does this mean from a customer impact point of view? So the first one I want to talk about is about enabling the shift to the cloud. Remember we talked about this pragmatic usage of cloud. One of the largest global brewing companies approached us to work with us to help drive their data center transformation. Now, what was interesting around this, and prior to this, Carabiner did very little offshore work. We started to deliver the data center migration services in Europe, South America, North America, and Africa, from South Africa. And part of the, I think Andrew alluded to it earlier, part of our advantage is the low cost of labor in the country and our ability to deliver these services across the board. So what did we do there? I mean, we delivered a 45% efficiency improvement on their workloads. We drove a 47% reliability improvement. And most importantly, we delivered over $1 million worth of savings as part of this project. The second customer I want to talk about is one of the largest soft drink bottlers in Africa. And we worked with them as part of a bigger grouping to modernize applications. Now, this was migrated all of their line of business applications into a single cloud environment. We streamlined their business processes. We modernized their data landscape. And this is where transformation from an IT perspective results in bottom line savings and the ability for customers to be a lot more competitive. Their cost prior to the transformation exercise was sitting at 2.85% of revenue, IT cost. And through this process, they've dropped that cost to 1.4%. Now, on a large revenue base, that is a massive saving that this customer is able to. And part of what they have is the ability to be a lot more agile and be a lot more strategic, because a lot of the core services that they spent their time on is now in the cloud and in a managed space. This is one of the customers where we are in year 2 of that engagement, and so we've got more and more work that we can do that. The last one I want to share is really around expanding our footprint as Altron Carabiner into the existing Altron customers base. One of the 4 banks that we engaged with, we won a EUC contract, end user computing contract. Part of Carabiner's value proposition in there was the provision of some skills around SharePoint, development, etc. We were able, through this last 18 months, actually quadruple our revenue in that space. So we had a nice annuity stream that came through as part of this win, but it gave us the opportunity to deliver other applications, whether it was in the group risk environment, in the group human capital environment, and development of a supply development application that helped them with their BE scoring. This creates the opportunity for us to de-risk. Now, one of the key challenges that we faced as Altron up front is that we had a high customer concentration in one customer. And that effectively put us at huge risk. What we are doing through these 3 customer stories that I've shared with you is we're starting to bring a lot more enterprise customers on board to reduce our customer concentration risk to ensure that we are a lot more sustainable. So should something happen to a customer, we have the opportunity to change things around. So in summary, what are my key takeaways? The recovery plan is in place to get Carabiner back to growth and profitability. The team that we've onboarded to drive that change is in place, and we're in progress of executing on that change. So we're poised for the new financial year to start strong. The current market conditions and Microsoft's results, I've shared some of these stats with you. They really show the potential for growth in the key areas of focus. And more importantly, as Carabiner, we are positioned, and in the strategy that we've picked and the areas that we've picked, that we plan to maximize that opportunity. Now, some of these key customer stories that I've shared with you now, the green shoots are in place. It starts to show the value that we can create and also to build a sustainable business into the future. So thank you very, very much for your time. I really appreciate it, and I hope you enjoyed our talk. I'm handing back to Nzinga. Thank you very much.
Colin, thanks so much for your time and orienting us about Altron Carabiner's role and, of course, sharing that strategy going forward with us. So another reminder, if you have any questions specifically for Colin around Altron Carabiner, just type it up in the chat box and we'll get to it a little bit later on. And a warm welcome to the last of our speakers, Pierre Brouwer, who's the MD of Netstar. Pierre, good morning and over to you.
Singa, thank you very much, and good morning to everyone. I tried to understand why I went last today, or asked to go last, and I realized they worked it out on age. So this is the last presentation, and maybe just to reflect on my previous presentation for this specific forum, just a quick overview and a history in and around Netstar. Again, important, we're 26 years old as a business. This year, started out with purely RF radio frequency technology, ventured into the GSM GPS technology, and then sort of added the fleet solutions. And last 2019 we celebrated our 25th anniversary. We announced an imminent OEM partnership and deployed and built a CAPS, a collision avoidance proximity solution that we take to the mining industry in the local, the African market, as well as in Australia. And 2021, from a strategic point of view, a focus on transforming our customer experience. Many of my colleagues have spoken about the digital transformation of their businesses, equally so for Netstar. And a fundamental ingredient to our competitive advantage would be our customer centricity as an organization. From a big data point of view, where we are today, we're going to talk, and we've spoken about cloud and cloud adoption. Netstar, probably an early adopter. We're the largest consumer of Azure data in the Southern Hemisphere. To put it into context, I think probably twice the size of a company like Emirates. So, we've managed to convert all our on-prem hosting facility and infrastructure to cloud, and using the COVID to accelerate that as well. Aligning our strategy to the Altron 2.0, very similar to what have been said before, but strategic priorities really in and around customer intimacy and transforming that experience. Our most valuable asset within Netstar is the 1,000 employees that work for us today, empowering them, upskilling them, and giving them the opportunity to serve our customers. We are a services organization. Interesting statistic in and around the development of our resources. When the pandemic broke out, we subscribed to the Udemy learning platform, and we've clocked over 7,500 hours worth of development for internal staff members. In addition to that, we've launched a digital sales academy within our business, empowering our frontline staff from a sales perspective on knowledge in and around our products and functionality. Digitalization is core to and key to our strategy going forward, and obviously profitable revenue growth. From a vision perspective, experience, the best experience in connecting mobile things. We're going to elaborate a bit on our customer segmentation. We've broken down the business into 3 very distinct verticals, focusing on the consumer itself, on the personal, small, medium business enterprise under the SMB banner, and then obviously the large enterprise commercial. Growth areas would be within continuing to grow our telematics in and around mobile assets, as well as adding people to that, and I'll elaborate a bit later on that. The exponential growth in data gives us the opportunity to really transform that data into meaningful information and giving and selling that back into our customers. I'll talk about our OEM partnerships. You're all aware of our Toyota South Africa partnership. We're currently busy with other POCs on OEM level. And then obviously Mteto, when he spoke about Netstar in terms of the growth plans and potential expansion from a markets perspective, I'll touch on that as well. And essentially, our business, we count subscribers, and many of our competitors sort of report on how many subscribers they've added, and so do we. So looking at our contribution to the Altron 2.0 strategy, obviously from an operating profit, we sort of calculate how many subscribers do we need to add to make a meaningful contribution. So our goal really is to add to existing subscribers and have 2.5 million subscribers by the end of 2025 financial year. Be the employer of choice. Obviously investing into our brand as Netstar and the best customer experience and have a societal impact in the territories and the regions we operate in. Is there opportunity for growth? I'm often asked this question in the South African car park and the market here locally. Just a quick overview of the South African car park. The eNatus numbers, 12.9 million registered vehicles in South Africa. By own analysis, after breaking it up, we can see what the penetration rate is from a telematics point of view, and you can sort of make the logical deduction that there's still opportunity for growth. The question is, how are we going to do that through those three verticals that I've identified? From an Australian point of view, Tito spoke about the last acquisition about 3 years ago. That car park pool is about 18.9 million vehicles. We took a bit of a bet probably more than a year ago in terms of venturing into Indian market, and subsequently also took an opportunity in Asia, and we decided to back the Southeast Asia opportunity first. Total market there is in excess of 200 million vehicles registered, and our rest of Africa business, the opportunity is about 900 million vehicles on the continent. So that's just really the park sizes in the territories that we operate in, and the opportunity for growth in those market areas. Maybe just a quick overview globally of our business. Our rest of Africa business is really small, and small in terms of contributing to our turnover as a business. In that specific area, we focus on all three verticals. However, commercial probably being predominant, some of our multinational customers traveling cross-border. In the SADC region, we need to support them out there. And then on the personal side, we've made some strides into some of the insurance customers, and hoping to make an announcement into one of the territories in East Africa on our insurance telematics product and solutions that we're offering into that market. This business hasn't been doing really well, especially from a COVID point of view. It is a challenging area. It's a challenging area to operate. We follow a distribution model, so very low risk operating into the specific territory. South Africa being the majority of our revenue, we operate in those three verticals. From an Australian point of view, we've done 2 acquisitions over the last 5 years. Last year when I reported to this forum, we spoke about the turnaround, the consolidation of that business. I'm very comfortable with the completeness of the consolidation as well as the turnaround. A great performance by the new leadership team in Australia. We've announced to the market the latest utility account that we won. That rollout has just started, so we're looking forward to a great year in that specific territory. Southeast Asia. So maybe just back to Australia. That's really where we as a business took a decision to acquire, to get into market. And then the question always is, are you successful by acquisition in growing that business? Last year I didn't really have a strong story in and around Australian growth. I'm confident that the turnaround has been successful. The next question is, do you have the capability and the capacity as an organization to facilitate organic growth in new territories? I spoke about the bet we took out in Malaysia, partnering with a local partner in that market together with an OE. And I'm very comfortable that in the last 18 months we've managed to add 30,000 subscribers in that market. We've positioned ourselves for other 2 markets in that area, and we've put in our bid submissions, we've made our presentations. COVID has hampered us from traveling abroad, but we've managed through the Teams and the Microsoft platform to put up a good bid, and hopefully we'll be in a position to make an announcement in that in those territories as well. The exciting thing about Southeast Asia maybe is just the similarity in terms of the requirement from a customer perspective, very similar to the South African consumer, vehicle location, vehicle safety and behavioral data. And that's where we're actually making available our platform to an OE, so from a platform as a service, and our data and our hosting in Azure as a service. So our cloud hosting, as well as with our platform, our own IP, now all being sort of in the realm of cloud, really gives us an opportunity to scale Netstar globally and expand globally in terms of markets very similar to ours. Just a last point on this slide maybe just is, apart from tracking mobile things, we've invested also into a device or a new technology that we've built, designed and developed from a Netstar point of view in tracking stationary assets. I'll elaborate a bit on that in a further slide. The opportunity from a mobile perspective on smartphones, latest statistics is 24.5 million smartphones currently in use in SA. And we see that as an opportunity also when we venture into the people tracking part of our strategy. Just from a key services perspective, our tradition and our DNA is vehicle telematics, tracking and locating, facilitating fleet management, providing risk management technology through our insurance telematics devices, and obviously the smart IoT rollout like a Toyota OEM solution. That's core and that's fundamental and the backbone of our business. Our key focus is and will remain on that going forward as we start also looking at alternative opportunities that our technology present us in the larger IoT space. We develop and engineer our own hardware. We have 2 contract manufacturers exclusive to ourselves with capacity to build as many devices as we would require. We build and develop our own software, and we have a very experienced R&D and technology team. Maybe just some key highlights here from a business perspective. On a client side, obviously the focus is on growing our customer base, driving top line growth. The key issue is churn. From an affordability point of view, in some of the markets that we're in, specifically South Africa, churn has really been an issue with our business, and COVID hasn't done us a lot of favors. As well as our organization was very manually driven and sort of digitalizing and transforming that environment into a digital ecosystem has been key focus areas. Our net customer growth, we reported half year that we continue to grow our subscriber base. We've introduced what we call a saves desk during this financial year. We've outsourced that to a partner that is very experienced and capable in dealing with customer retention, and that has seen us making an impact on reducing churn. COVID, obviously, from an affordability, has had a major impact. From a broad-based black economic empowerment, just on the South African business, we come from a level 4, we're currently a level 1. In this context also, we've announced to the market our new Netstar board, which is chaired by Stuart van Graan. We've added, on a non-executive capacity, Brett Dawson, Marius Swanepoel and Andrew Holden to that board. We've engaged with the new board in terms of forming a strategy and a 5-year plan from a growth point of view, and interacting very well with the new board and excited about the future. On the Protect side, maybe just from a recovery statistic point of view, you all aware of the introduction of our new recovery partner that we did more than a year ago. That's proven very successful. We've upped our recovery rates from, I think it was 89% at that point in time, to 93% where it is today. Our migration to the cloud I've spoken about. Just some context in and around the size of our cloud and why we're such a big consumer of Azure data is we ingest about 250 million data points a day. So that is significant in the data scheme of things. From a Connect point of view, the whole pandemic sort of accelerated the way we had to adjust to customer requirement. Customers today, they've changed their buying patterns. We've launched our buy online platform. The first month of that launch, quite interestingly, we had about 6 online buyers. 4 or 5 months later, we're probably clocking about 650 to 700 new customers on that platform. It's a fully e-commerce platform. So you buy online and you can schedule and select your site or location for fitment yourself. We're actually in the process of rolling out that to some of our customer partners, especially in the insurance vertical, where they'll facilitate that through their call centers back into our office. So why is that important? Well, first and foremost is you addressing the customer requirement and meeting their demand. But secondly, also it has a cost impact in terms of your acquisition cost. So it has a reduction impact on acquisition cost of new business. On the connected partnership, Toyota, we announced to the market that we were successful in securing this connected Toyota contract. Started off with a contract that we need to fit 600,000 Toyotas at factory production line down in Durban, as well as all the imports from a Lexus perspective. This has really been going really well. The last statistic was, I think at half year, was something to the amount of about 50,000 Toyotas fitted. In August half year, it went up to 90,000. We're probably just north of 124,000 fitted at this point in time. Quite interestingly, from a Wi-Fi usage perspective on the My Toyota application, we've picked up that there's about a 49% registration and usage, and we've provisioned about 360 terabytes of data into these 120,000 vehicles. Our dealership platform that we're building in conjunction with Toyota, that's been launched. It's currently being tested on all staff demo and stock vehicles, and we're working on the fleet platform as well. This relationship is growing from strength to strength. Obviously, we make money on hardware here, and we sort of get paid for our services in terms of presenting telematics data back to Toyota for 5 years after fitment or after the vehicle's been sold. We make our money on conversion as well in terms of upselling stolen vehicle recovery. This has been rather slow due to the fact that COVID has delayed the development of third-party developers from a Toyota perspective to enable that leads to become available to Netstar. However, we currently run a conversion rate of close to 14%, which is rather okay. We hope to take that up to about 30% in the new financial year. Just maybe as a reference, our Malaysian business and OE business is also Toyota related. It's not a Connect device that we sell into the Malaysian market. The next generation would be a Connect device. We've also received approval from Toyota South Africa that the My Toyota application can be used in the Malaysian market, so we'll be taking that and support the rollout of that in that specific market. From a COVID impact perspective, we obviously looked at our budgets. We've adjusted budgets, what we dubbed the COVID budget within Netstar. And we looked and had a critical look at our cost structure, and the target was to to try and reduce our operating costs with about 40 million rand year on year. I'm pleased to say that we're very close to that number. Unfortunately, the reality is we retrenched approximately 98 employees. And from a revenue line perspective, some of the larger contracts that we won, there's been delays in the rollouts. Hopefully some of them will become imminent now and accelerate our growth into the new financial year. We've had a critical look at our operating model as an organization. The new normal has sort of taught us a lot in terms of how we need to look and what we should be looking like as an organization from a future operating model perspective. In this regard, our sales contact center, we took a view: do we invest into technology and transform our processes, or do we partner? We've taken a partnership approach. We've outsourced our sales contact center in two parts. One part would focus on our retention of customers, that saves desk that I spoke about, and the others would be onboarding customers. And we've already seen, over the last 4 months, an improvement in our conversion, as well as, I think, just, on a very simplistic term, if we onboard a customer, in terms of the old process, we'd probably have 6 to 11 iterations or discussions with the customer before conclusion, and that has now been reduced to 1 or 2 conversations. The focus really would be on the new operating model to improve on our customer centricity as an organization. Netstar's proven resilient. The impact really, if you think about it in simplistic terms, is with a hard lockdown in March and the subsequent further extensions of the lockdowns and levels, we were really placed in a position where we were not allowed to sell as an organization out of a call center environment. So you really lost, probably a month worth of revenue, but we've proven resilient. However, our margins, up 2%, posting similar revenues as the previous year. Our turnaround in Australia is something that we're very pleased with. The growth in Malaysia, the opportunities in neighboring countries to Malaysia, excited about, and our subscription base year on year grew to 16.6%. From a growth point of view, I'm not going to be too long on this, but essentially we have 3 platforms on which we operate at this point in time. So the Netstar online application, the customer portal, and the Netstar app. So what we've done is we've consolidated this, and how we did it was we used some of the IP that we acquired when we acquired the Australian business, consolidated our platform into a singular platform, and we'll be launching the My Netstar application within the next month probably. It's a singular platform in which customers can do a number of things that we used to do or who had to do on their behalf. So you would, in future reference, you'd be able to manage your account, you'd be able to view your personal, your financial, and your vehicle details. You'll be able to download your statements. You'll be able to have a chat in terms of RPA processes behind the application. So that would ensure that our data in terms of our customers is always accurate. It would reduce the amount of financial queries that we deal with on a daily basis. And it will enable customers to also facilitate safety features and monitoring on their own when it comes to their vehicles and their assets. You'd be able to see whether the vehicle is on or off, whether someone is driving the vehicle, at what speed they're driving it, if it's a family member. So you'd be able to monitor it. You'll be able to set up due fences and due zones if a vehicle is according to you not allowed outside a specific area. It would alert you that it's exiting the area. And part and parcel of that would be our value-added services that we launched would be integrated into this platform, where you'd be able to renew your license, and your license would be delivered at your home. There'd be roadside assistance. There's concierge services from a VAS perspective integrated with this. So from a future point of view is going into the MyNetstar platform. We got the VAS platforms behind that. And then we started the development on the people tracking side. And hopefully this is sort of the on the right, the digital ecosystem that I'm talking about. Our time frame is a phased one, and we are targeting to deploy a fully fledged new MyNetstar application over the next 2 years. First phase would be to launch the MyNetstar. Second phase would be to launch the companion app. The companion app is actually going live within the next couple of months. That is really where you'd be able to press a panic, whether you're at home or you're an individual cycling somewhere, and you'd receive emergency response like we do for stolen vehicle recovery and emergency services. And you'd be able to track family members. This application could also be used to track medical patients that needs tracking from their medical condition perspective, and many more. And then it would go into the MyNetstar garage, where you'd be able to upgrade and downgrade and upscale and add vehicles and select and fit and select your fitment time and periods. And then we contemplating a net mart. Now the net mart is quite interesting, and this is where we talk about home, and you'd be able to buy IoT devices for home. In other words, you'd like to have visibility on your geyser and power monitoring and gate monitoring, and that you would also be able to do on the specific platform. So very excited. Do we have the capacity to facilitate this development in-house? We've partnered with an external partner, and we've already had our first 2 scoping sessions. So excited about the future when it comes to this development. Just from a growth point of view, going forward, I spoke about the people. From an assets point of view, a non-intrusive device. We've built a device which, when I say non-intrusive, it doesn't have to be wired. So it's self-powered. You can track non-stationary items, cargo, specifically cargo on our fleet management business. So apart from tracking the truck itself and the trailer, we can now track the cargo as well. 3 sets of technology into that device, which opens a multitude of opportunities for us. The one being our traditional RF technology for our last mile recovery, our GSM technology, and we've added a narrowband technology in partnering with Sigfox. The first number of devices has gone into production, and we hope to take some of them to market. Why have we done this? There's a big demand and need from our fleet management customer base in cargo security, not only here, but in some of the other territories we operate in, but also from our larger automotive customers for data solutions, warehouse solutions, asset and warehouse solutions. In this specific instance, our exclusive partnership with We Buy Cars, we're looking at assisting them in managing the 12,500 pool of vehicles that stand on their warehouse floors on a daily basis, and we'll be able to on-sell stolen vehicle recovery on that. From an OE perspective, the Toyota partnership is ongoing. We are in pilot with 2 other OEMs, one in South Africa and another one in Southeast Asia. From a market expansion point of view, continuously looking at markets where we have a fit for technology, and sort of where we see that our organization would be able to accelerate quick in those markets. So we're very cautious, but obviously looking at expanding our business globally. From a personal business and commercial perspective, obviously, stolen vehicle recovery remains core. I see some of the statistics released in the South African market shows a 10 to 13% reduction in stolen vehicle recovery. We've seen similar numbers over the COVID period, although our crime rates are probably back to where they were pre-COVID, and obviously a big focus area on logistics, and risk in and around that. We're confident as Netstar that the strategy and the technologies that we've adopted gives us the opportunity to continue to grow, to expand globally, and delivering the expectations to the bottom line and contributing to the 2.0 Altron strategy. We will continue to connect and protect our customers through a sustainable digital platform and the transformation of our business on a digital level. We're excited about some innovative connected devices that we're going to bring to the market and to our existing customer base, and really facilitate a deep IoT experience like we do, for example, with a Toyota, and continue to grow our big data opportunities as an organization. From that, thank you very much. Appreciate the opportunity and the time.
Thanks, Pierre. It certainly sounds like 2021 is going to be an exciting year of growth for all of the Altron businesses. As promised, time now for your questions to be answered. We just need a moment to get everybody back into the studio with Zipporah Maubane, who will be guiding your questions to the right leader. And this is where I say goodbye. It's been a great pleasure being your program director today. We'll take a 10-minute break, and then Zipporah will be getting your questions answered. Good afternoon.
Security is something we all wish we didn't need to think about. Altron knows exactly how important it is to protect the assets you have worked so hard to create and accumulate. This is exponentially more important in our digital world, where new threats are coded every second and vulnerabilities exploited as we speak. And yet, economies continue to grow and transform and shift. And precaution shouldn't be the enemy of your profits. We believe in providing safety that won't slow you down. We believe that you should be able to take the important business risks without putting yourself at risk. We believe in protection that supports your purpose. And we know that, to accomplish these, we need to fuse together the best offerings from diverse disciplines into a singular solution that secures your identity, defends your data, safeguards your cloud workloads, and continually manages your operations in a way only Altron can. Let us take you on a journey to secure your business. Identity management. As we widen our world of work, we open thousands of new doors into our organizations. Our secure digital identity profiles are the crucial keys that maintain tight control over access to your inner workings, sensitive data, and confidential information, so that spreading your workforce and their devices out doesn't allow unwanted elements in. Data privacy and protection. Trust is earned over years, but destroyed in seconds. The responsibility we have to safeguard our customers' data is as important for their futures as it is for the organizations they rely on. We find encrypt your data and align your privacy compliance with the regulatory requirements of your jurisdiction as well as with your business strategy, so you can innovate for your customers without having to worry about exposing them. Cloud security. With more than 80% of workloads taking place on cloud servers all over the world, cloud is as important to businesses' performance as their people are. We support you with advice on how to harness cloud security capabilities, and our solutions protect your users at the new cloud edge and the workloads that happen 1 billion times a minute within them. Managed security services. Like our organization, our services, and the threats to them, security must be ever evolving. But evolution requires a framework, purpose-built for the future, designed with intelligence and forethought. Our managed security services pulls on global insights to proactively keep you ahead of the threat curve, monitor and prevent any attacks, and defend your entire value chain 24/7, 365. Your business and its future is your focus. The safety and security of your digital assets is ours. When your intellectual property is safe, your customer data is secure, and all the thousands of doors and windows into your organization are closely monitored, you will truly have the freedom to continually grow your value chain, disrupt your industry, and build your story far into the future, whatever that may look like. Altron. There when it matters.
Good afternoon, everyone, and welcome back to the Capital Markets Day of Altron. This is the Q&A session. We're going to start quickly, as I have now everybody in the room. We're going to start with the first question from Munir. How does the unbundling of UK impact the mentioned partnership with security? This question is for Marius.
Thank you very much for that one. Firstly, we established the entity towards the end of 2020. And in that process, we first were just getting the entity registered, and then we recruited our staff there to start the process actually a little bit earlier than that. In terms of the formal partnership we've reached with Phoenix and Bytes UK, that was actually formally done only in the beginning of this year, actually after the Bytes exit. On top of that, if we look at what we're taking to market in the UK, that is pretty much add-on solutions in the form of identity security solutions to what Bytes UK and Phoenix specifically is doing in that market. So we're working very closely with them to leverage their vast customer base in the UK, and it's actually a partnership that's both sides very beneficial.
Thank you very much, Marius. This question is for Colin at Altron Carabiner. It's wonderful to see the efficiency improvements that Carabiner provided for its soft drink bottler and beer manufacturer. Once their move to the cloud happens, what is the potential for repeat and annuity business? This from Muren.
Thanks, Zipporah. So very quickly, in our strategy, we've stated there's two areas that we want to grow in, and that's managed services and our driver on cloud service provider growth from a software point of view. So as customers move to the cloud, the first thing that happens as part of that transition, we propose that we would take over the run of those services from a managed services point of view, and that provides an annuity income stream on a monthly basis with the services that we can provide to them. The second component of that is as they transition to the cloud and they start to consume the cloud, as being a licensed service provider and a cloud service provider, we have the ability to sign up as a digital partner of record. And what that provides us with is as the customer consumes data and consumes services, there's an opportunity for us to get a rebate back from Microsoft, which happens on a monthly basis. And as the customer consumes even more and more, those rebates come in all the time.
Thank you very much, Colin. The next question is for Johan at Altron FinTech. What are you seeing in terms of consumer behavior from your debit check work? This is from Preversion.
Thank you, Zipporah. Debit check is a transaction that was introduced by PASA and BankServe a number of years ago. And according to the initial timeline, it had to be in production about 2 years already ago. What we have done as a mitigating circumstance to be ready to process debit check transactions, we decided to develop our own platform, entered into agreements with 3 sponsor banks, and we have got our debit check platform fully in production today. What we promised our customers is that it would be business as usual for them. What does that mean? Where a customer now makes use of our ADO or NADO product, which is the traditional debit order product, they would be able to transition to the debit check transaction or debit order seamlessly. So we built our software, because we're in control of our own IP, in such a manner that the customer-facing screens of our application would mask all the complexities of debit check. There is a bit of resistance amongst our customers to migrate. We've already migrated to the tune of 300 million transactions that we collect on a monthly basis onto the debit check platform. And the leg that we don't have any control over is the consumer leg, because the issued bank requires to authenticate the transaction via their issued consumer. So we're currently looking at solutions. How do we actually push that authentication leg of the transaction? But for the investor community out there, our fintech solution is ready to process the debit check transactions. Thank you, Zipporah.
Thank you very much, Johan. This question is for Pierre from Munir. Pierre, Nesta has over the last few years massively underperformed Cartrack. What is it that you think that Cartrack has done better than Nesta to achieve this growth? And what are you going to do to catch up with Cartrack?
No, thank you, Zipporah. I think a question that probably requires a bit of deep diving and a longer conversation, but just on a high level, you know, two things for me. The one is, I think Cartrack's been particularly good in segmenting their channels in terms of developing strategies for a go-to market. So in my presentation, I spoke about us segmenting our market into a personal, a small, medium business and a large enterprise. And by doing that, it really sort of creates, you know, different strategies from a go-to-market perspective and how you're going to target those markets. So I think they've been very focused in terms of the markets that they went after. And I think secondly, maybe, you know, comparatively, if you look at their global footprint versus our global footprint, you know, our offshore revenue is probably to the tune of 15%. I think they're probably close to 35%, I think the last number I saw. So, you know, they've got a bigger presence globally than we have, but they've done really well. And, you know, we'll give it a good shot in terms of getting back into those verticals that we haven't been playing in, you know, over the last couple of years.
Thank you very much, Pierre. We're going now to Andrew Brown. Here's a question for you, Andrew, at Altron Health Tech. There has been a lot of press about telehealth in the context of COVID. You mentioned that you are able to provide the technology to enable this. What has been your experience of the take-up of telehealth in South Africa?
Zipporah, thank you. Well, if we look at it purely from a technology perspective, I mean, for a lot of us, we're using Microsoft Teams and Zoom, and even this whole production that we're doing today is all being done virtually. So it's not about technology, it's more about the adoption thereof. And it's interesting, we can see through the claim statistics that we get on a monthly basis, because healthcare practitioners have to code what it is that they're doing in order to get repayments from the medical schemes. And we can see that the telehealth, which has a different code to an in-person consult, and if we just analyze the general practitioner market, we could see that in about January, February, March of last year, pre-COVID, it was sitting at, you know, less than 1% for that sort of coding. It reached a total of about 8% in July. So that was first wave. It then dropped off quite dramatically and then increased again up to about 5% of total consults in January in response to the second wave. So it hasn't been this wholesale adoption. And we've had a look at it, and we think there's sort of been three drivers. The first one is we did a bit of a social media poll of patients. And quite simply, whilst we can see that patients are not going to the general practitioner or the doctor as often as they used to, what we are seeing, though, is that they were saying the general theme is we actually prefer to see the doctor in person. That was the first thing. The second thing is, from the doctor's perspective, there are two drivers. The first one is that they don't actually earn as much if they do a telehealth consult as they would if it's an in-person thing. And I guess, you know, doctors are professionals, they've got school fees to pay and stuff, so that could be a driver. However, I think the more important one that we're seeing, and this is anecdotal, but doctors saying, you know what, if I'm in person and I can see a patient, I don't miss things. I heard a story about a doctor saying the other day just that he, through the telehealth medicine mechanism, that he missed the pallor of a patient's skin because it didn't come through on the screen as well as if he had been in person, and therefore would prefer actually going forward to see the patient because he doesn't miss symptoms and therefore can come up with the correct diagnosis. So I think it speaks to use case. I think when you've got a case that you've got a healthcare professional in the room with the patient and they could dial in another healthcare specialist, and they could have a discussion, and the patient in that context is more like a spectator to the process. I think there we've got a scenario where potentially we could be leveraging scarce resources, medical staff, in South Africa and having a greater reach into maybe the rural areas. So I do think there is a space for telehealth. Okay, it's a question of where do we apply it.
Okay.
Thank you.
Thank you so much. Thank you, Andrew. This is for Andrew Holden. This question is about skills. As Altron move to deliver high-value services, more advanced skills are required. Will Altron have access to these skills in years to come?
Thank you, Sapora. So, not a simple answer into the skills availability in South Africa and call it the ability to attract the skills. So let's say 3 or 4 main components into Altron. Let's start with the brand. And Altron has a terrific brand in South Africa, and it's a values-led brand, attracting people because we're diverse, we're inclusive, we deliver, all the good things around what people are looking toward being associated with this environment. If we have a look at the second, and I'm not going to talk about monetary returns because monetary returns is a given, we have to pay market-related salaries. But if you have a look at the second thing, and in my presentation spoke about the customer base that we have and the type of work that we've done. And we heard from all of our colleagues around the room earlier today, the exciting projects, the innovation, the advancement made in some of the things that we are delivering to our customer base. And that, I believe, attracts individuals into a brand like Altron. The ability to grow their own CV, the ability to work on interesting, exciting projects and to deliver something that really matters into their communities and their customer space. So I think that's number 2. Number 3 is growing our own skills internally. So in most of our operations, we have graduate programs. We are looking for young talent, bringing them into the organization at junior levels, and then giving them work and skills experience and growing them into meaningful careers within Altron. That doesn't mean we're going to keep those individuals over a long term, but at least from an industry point of view, we are growing those skills and therefore helping ourselves as well as maybe helping our competition. And the last environment is putting people at the center of what we do at Altron. Now, we spoke about customers and customer centricity. Marius spoke about the sort of the identity access and putting identity at the center. And let's talk about putting people, our employees, at the center of what we do. And some of the changes that we've made and speeded up some of the changes through the COVID environment is giving a lot more flexibility, a lot more freedom into our employees. So what does that mean? We've allowed those employees to work from home, to be productive from home. It saves people time, it saves them money. You can imagine I used to travel an hour each way to work in the day. So we've got that back into our environment, and we've formulated that policy internally that work from anywhere. And so that given advantage, you can now go, one of the people that work within the Altron head office, I know stays on in Pledge during the week and delivers a great service from there. And so that's an attractive environment. And we all spoke about international expansion. We spoke about delivering service from South Africa. And that's at the very heart. If we can work and be productive from anywhere in the country, that certainly adds to our attractiveness for the industry. So not an easy answer, four legs to it, but I believe that we can attract and retain the required skills to move up the value chain into the future. So thanks, Sapora.
Thank you, Andrew. And the next question is for Marius at Altron Security. Marius, what distinguishes Altron Security in the market? What is your unique value proposition?
Thank you, Sapora. Quite a tough one there. Firstly, if we look at this new security world that's been unfolding, pretty much fast-tracked by the happenings of the last 12 months, everybody talks about that identity centricity, user centricity, and I think that's a key thing. That's something that's some experience and knowledge and deep knowledge you need to be able to be successful very quickly in this new security landscape. We are fortunate that we are the market leader in this space, and we've got 18 years of experience and thinking about identity centricity. And I think that's a very important thing to have to be able to be successful in this space. And the second to that, we are fortunate that we are with the leading industries in South Africa in the financial space, the large banks, insurance companies and telecommunication companies, where we work very closely with them and in a lot of cases being their strategic advisor around how they navigate this space. Now in that process, we are 100% sure that this identity centricity is very much part of where things are going. If we can compare that also with what the industry research is saying, we know we're very, very well positioned and very early in the market with a lot of experience and skills we can bring to this space. And I think lastly, if we look at One Altron, this must be the largest ICT company that is bringing or have the capability to bring this approach to market. If you look at the other strong focuses adjacent to security, like digital transformation, cloud adoption, and a big focus on data, I think that gives the perfect mix for us to be successful with Altron in this space. Thank you.
Thanks, Marius. And the next question is for Cedric. Cedric, what is the rationale for setting a net debt to EBITDA target of 1 times? Why is 1 times seen as ideal for the long term?
Thanks, Zipporah. So yes, that is definitely a very valid question. And maybe I would like to just touch on a couple of data points, just to explain our thinking around the ratio of 1. First and foremost, the terms dictated to us by the banks, we operate under a 2 times covenant ratio. And clearly we would like to have sufficient headroom, 1, to absorb shocks like we have seen with COVID. And then number 2 is that, we can avail ourselves to, bolt-on acquisitions when those opportunities present themselves. But then probably, more from a financial reasoning perspective, the target, capital model that we're pursuing is to be 80% equity funded, 20% debt funded. Now, if you look at the current market cap of Altron at about, say, 4.5 billion rand, then, it does land at about 1 billion rand debt funded, and that's exactly where we find ourselves. And if we remove Bytes UK as well as the disposal group, if we reduce that EBITDA, again, you get to the billion type of number if we use last full year reported numbers. So that also supports a 1-to-1. I think if we make the right acquisition, we're willing to go to a capital structure of, say, 70-30, but probably not more than that. And then maybe also just anecdotal, Altron was priced at stress debt levels about 4 years ago, and that is still very much top of mind. So, we will certainly have a bias towards being slightly more conservative. We have seen corporates, in recent years that took on too much debt while the going was good, but when the tide went out, they really battled. So therefore, we would probably remain on the cautious side. And for us, now, as I have explained, a 1-to-1 ratio or a ratio of 1 does make sense for us.
Thank you. Thank you very much, Cedric. And this question is for Mteto. Mteto, what are the prospects of listing Nesta separately in the future? This question is from Ernest Kaplan.
Thank you, Zipporah. That's a very clear, direct question from Ernest, and I'm sure a number of people on this call would like to have an answer to that question. I won't answer it directly. I will go back to the decision that we made last year as a company to separately list or Bytes UK. Many people at the time, they could not quite understand why a management team like ours would take a crown jewel as Bytes UK was to us and go and list it in the London Stock Exchange. But we did. We are a leadership team that is largely driven by doing what we believe is right for the company and for our shareholders. And our leadership team, together with our board, we continue to try and do what we believe is the right thing. And at the time, it was the right thing to separately list Bytes UK, and we saw the results of that exercise. I believe that if any of our assets were to find that after having done a sum of the parts exercise, we come to the conclusion that it is not valued properly and it requires us to act differently, I have no doubt that this leadership team would make that recommendation, and our board would certainly make the right decision to separately list that entity, whatever that entity is. It could be Netstar, it could be health tech, it could be fintech. That is what we do. We are a leadership team that is not married to size. You know, it's not like all we want is to have to run this big group that has got a huge revenue. Our interest is really to do the right thing. If that right thing is to separately list any entity, that is what we will do.
Thank you. And while we're still on you, Mteto, there's a question from Richard Hassan, and he's asking, considering the success of the Cartrack offshore listing, is this something you would consider?
Offshore listing, yeah. So again, I think this is linked to my answer in the previous question. We will do what we believe is the right thing to do, and when we're doing the value unlock, what is important is to say, what is the best route for us to do? Looking at the recent example of Bytes UK, we enlisted the support and the guidance of advisors in the UK to help us through that process. Of course, there were many advisors from South Africa as well, but we enlisted the support of the right people so that we can achieve our ultimate objective, which is to realize the true value of that entity. It would be the same here. If we were to make a decision at some point that Netstar needs to be separately listed, we also need to be asking where. Is South Africa the right place for us to be doing that listing, and why? Or is elsewhere is the right place, and why? And then we will make that decision. So that is the kind of board that we have, a board that looks at all of the options and try and come up with a decision that is the right decision for our shareholders.
We've come to the end of our Q&A, and thank you very much on behalf of Altron for attending the Capital Markets Day.